Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We are just 15 minutes away from Bank of America earnings, and we're interested in this one because this is the one that promises to be using XRP, and we've got a big audience here for XRP. So XRP is up this morning, very nice indeed. We are looking at the overall market as well. And as we can see, Bank of America, massive beat today, a huge beat. Let me show you. I posted it on all my socials, so you knew in advance it was a beat. Oh, another new member.
Sanjoy Chakraborty has become a member.
Thank you very much indeed, Sanjoy, for becoming a member. As you can see, it's a massive beat, expected 82, and we got 90. Huge beat from Bank of America today. So let's hope we hear something about XRP, or at least the use of cryptocurrency. That would be very, very good to see. So anyway, Bank of America is up. It's good for the overall market. It's good because the finance sector is the strongest part of the S&P alongside the energy sector right now, as I predicted it would be. So that's really, really good. That's good for the overall markets, even though we're down this morning a little bit. If it goes down another 5–10%, like we've seen up and down, you wouldn't predict the S&P doing that, but it has been doing that recently. I'll be buying more. Got another $28,000 on standby. This is the Bank of America earnings. We have it ready to go. It's all set up, ready to go. So as soon as it goes live in a few minutes' time, we'll cover it live. But we are here for Bank of America, and we are here to keep our eye out from any information on XRP as well. So are you ready? Let's get ready. So what we like to do is start off the show. Let me bring in the tickers on the screen so keep up to date with what's going on. All the information you need on the show is there as well in the ticker. Now, we are always in members only mode now because the channel has grown so much. It was always about providing the best quality service, not how we can get more subscribers. It was always about that. So we want to serve our members best. So we're in members only mode. We do have one member who is actually a platinum member. Let me explain and show you what that actually means. If you look on the home page of the channel, you'll notice as of yesterday, we have this new addition. This is the homepage where you're watching right now. You're watching the XRP and Bank of America earnings. If you look down here, you'll see right at the top, there's a playlist called VIP Platinum Investors. This is our membership for Platinum VIP investors. We have one very, very special VIP investor, pays $500 a month to support our channel. And for that, they get all the bronze, silver, gold sponsorship levels, plus they get their very own videos made for their whatever they want. So they can request a video and I will update them with news, exclusive news. That's what this is at the top of the screen. You can see there. So we do have a very large way you're watching our show and investing in our channel. So there you go. That's why that's up there. All right. Okay. Let's go straight back to the XRP and Bank of America. Now, we are running a poll right now, which is very, very interesting. Let me just get rid of my tag that I put up there a minute ago, and we'll remove that and we'll unpin that. There we go. Earlier, we are running a poll. We will end this poll during the call. We're asking you, are you here for Bank of America or XRP? Incredible. We've got 88% of our viewers today are here for XRP. That's just incredible when you think that this is a Bank of America earnings live broadcast, and 88% of you are here to hear about XRP. That's incredible. The support for XRP is obviously extremely high, and people are really enthusiastic and wishing to support XRP and know anything about it. It's absolutely wonderful to see that. Bank of America should pay attention to that. I do have contacts at Bank of America, so they should notice this. This is very important. Now, do we have Manuel Magna in the show today? Do we have Manuel Magna? Let me see if he's here. Manuel Magna. I don't think he's in the main channel. Let me see if he's in the extra channel. Let's have a look. because he's a little bit confused, I think. Let me see if he's over here in the extra channel. No, it doesn't appear so. Let me try that again. No. All right, I've been trying to get hold of one member, but not been able to do so. Let me switch that back. Right, okay. All right. So after this event, we've got a big day on the markets. The US is suing Donald Trump for the tariffs. I'll explain more. But what I'm going to put here now is join me live after this event on Extra. I will then bring you to the next main event. Okay, so let me pin that to the top. This is where we're live now on Extra. So after this show, we'll take you to the Extra channel, which is our 24/7 backup channel. There you go. Let me pin that to the top. And then from there, I shall bring you to the US is suing Donald Trump for these tariffs, not being for the emergency he said it was. You might want to be made aware of that. Okay, so let's get ready to go. How long have we got? 7 minutes to go. This is our Extra channel. If you've not yet joined it, it's a separate channel, so you subscribe to it separately. And what you've got a replay of the day's events, so people that watch at different time zones, because we have members in 69 countries who tune in at different times, and they don't just want to watch one of the old one of the videos from the morning. They actually want to be able to talk to each other live and talk to me directly into the studio and update what's going on, get live support, live Q&A. And this chat here is all live. And these people here at the moment are watching yesterday's show. So it's a very important. I had lots of interviews yesterday and debates with people, and they're restreaming yesterday's shows, different time zones. And you can see this is me in the studio live here. This is me here, but as you can see, we're restreaming the previous day shows. So after this show, I will be restreaming this on the Extra channel, but the chat here is all live, and then I can talk to you and bring you into the next event. You can let me know about updates, so on and so forth. All our team are always researching. We're all working together for the greater good of us all being able to invest wisely and make money. It's the power of the Lucasade family. It's working 24/7. Amazing. Right. So did Manuel Magana come in? If you did, let me know in the chat. How long have we got? Let me go and check the feed. This is the feed. We've got 6 minutes to go. There's Bank of America. We're watching Bank of America this morning, and we're XRP. I know most of you are here for XRP. 90% of you are here for XRP if it gets mentioned on the earnings. Let me bring everyone's comments and questions in. Good morning, Dan Ackerman. Let's go crazy. I'm slow rolling, only have 1,390 at 218. Just out of curiosity, how many XRP tokens is everybody at so far? That's interesting. Good question. Raging Gun, Team BAC. Oh, there we go. We have an investor for Bank of America. There we go. It's not all XRP today. I love it. I'm over 30,000 in tokens on XRP currently anyway. Wow. Stacy, Savage Faith Creations, she's all in. $30,000. Woo. Oh, hang on a minute. I've got over 30,000 in tokens. Does she mean 30,000, which would be 60 grand, or does she mean 30,000 in money? Either way, it's a lot, whichever way it is. I'm here. Good morning from South Carolina. David Raman, good morning to you. Hi, Mike. Lovely to have Mike here, one of our founder members. Mike was here on day one. Mike has a 3-year badge, soon to turn 4 years. Incredible, isn't it? Hi, Lucas. Very good morning. Is the XRP about to reach $15 by month end? No. I don't know where you get that from. We predict a $10 token. We've never predicted 15, 20, a million like some people do, and certainly not by the end of the month. But who knows? Anything could happen, couldn't it, in the crypto space? Jeffrey, Frederick, Stephen Lewandowski is here this morning. Sonjoy just became a member. Where are you? This is our new member. Sonjoy, where are you calling in from? Welcome to the family. It's lovely to have you here. Where are you actually calling in from? Love to hear from you. Hi, Martin. Looking forward to tomorrow's show. Jeffrey, what's tomorrow? Wednesday, April 16th. What's tomorrow's show? Jeffrey Diamond. Hi, Martin. Looking forward to tomorrow's show. That might have been in last night, was it? Maybe in last night. I don't know. Oh, it's another new member.
Syrian Marshall has become a member.
Oh, it's your 2 months. You're celebrating your 2 months. Oh, fantastic. Stephen Lewandowski, good morning to you. Good morning, everyone. We got 3 minutes to go. RB is here. Frederick, good morning, RB. Good morning. I have 10,000 coins of XRP. Yolanda, this is the Bank of America earnings, but we are also keeping an eye on XRP if it gets a mention. Wise investors watch the earnings. Simple as that. Hello, Stephen. Good morning to you. It's only just come on phone messed up. Have I missed much? No, we haven't started yet. Craig, all acts, morning, Wingo. Jason is here. Vinny is here. Good morning to you. Mickey Six Strings. Good morning. Philip Castle. Tish Armstrong, good morning, XRP Army. Lucas, and special greetings to our fierce leader. That's very, very kind. What a nice thing to say. Good morning, communications and willingness to compromise a key to expediting a deal. Morning, 4,500. I got 100. 3,500. 30,000 tokens. Ooch. So you must be 60 grand in. Maybe 62 grand in. Well, we got one of our biggest investors here, Stacy, Savage Faith Creation, about $62,000 worth of XRP. Blimey. So when it goes up for her big time. Syrian just renewed her membership. 37,000 coins. Morning, folks. 1,000. Hello, Chori. Tax day, 4,500. I came in late, only at 630 XRP. Don't say only. Whatever you have is amazing. All right? You have a lot more than me because I have none. I'm only in the S&P, so I can be completely transparent and honest about my reviews. Okay, with 2 minutes to go, let me bring up the audio. Here we go. We're on standby now. You can hear the music there. That's their background music playing. There might be slides, there might be not. Let me refresh everything. Okay, I'm going to mute that. That's their audio playing in the background. This is Bank America earnings. They've had a massive beat today. They're making lots of money. Remember, I've said to you the favorite sector at the moment in the S&P is the financials and energy. A lot to do with efficiency as well is cryptocurrency, XRP, the leader. And it's been alleged, and there's some evidence to suggest that Bank of America is using XRP, and we want to hear that mentioned in an earnings call. So we are very hopeful if that could be mentioned today. It would be a big thing, as we do have 90% of our audience waiting to hear something like that from the Bank of America. So if there is any facts about that, you'll be first to know about it. Right, we've got 1 minute to go. So let's share this out.
To stand by.
Okay, now what I want to do, we've got 30 seconds. We want to share this out to the world. Are you ready? Everyone tap the like button. Go, 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 go. Let's get 300 likes in 1 minute. Tap the like button. I'll bring you the earnings call the moment it starts. Click subscribe and ring the bell. Tap the like button. We want 300 likes. 300 likes in 1 minute.
Sasha Lantier has become a member.
This is how many got watching now for XRP and Bank of America. We have 441 watching. Smash the like button. And we're going to go over now to the earnings. Here we go.
Please. The program is about to begin.
They're still playing background music.
And welcome to today's Bank of America
the details of the quarter. Let me just remind you that we may make forward-looking statements and refer to non-GAAP financial measures during the call. Forward-looking statements are based on management's current expectations and assumptions that are subject to risks and uncertainties. Factors that may cause our actual results to materially differ from expectations are detailed in our earnings materials as well as our SEC filings available on the website. Information about non-GAAP financial measures, including reconciliations to U.S. GAAP, can also be found in our earnings materials on the website. With that, Brian, let's get started.
Thank you, Lee, and thank all of you, and good morning, and thank you for joining us. Given the recent events, we want to do a couple things with our time today. First, we want to provide a clear picture of how well the fundamentals of the company performed to produce another good quarter of earnings in the first quarter of 2025. So I'm going to talk through a little of those highlights, and I'm going to turn it over to Alistair for details on the quarter and some forward guidance. And second, given the market volatility and the concerns of potential changes in the economy and its outlook, at the end of the quarterly presentation, we're going to give you some facts to set the context about the quality of our credit portfolios, our capital, and our liquidity as we may face periods of economic change, and set that in the context to how we fared prior to past periods of economic stress. So let's get going on slide 2 of the discussion. This morning, Bank of America reported $7.4 billion in net income and 90 cents in EPS for the first quarter of 2025. That's a solid start to 2025 and great work by our teams. On a year-over-year basis, we grew revenue by 6%. We grew net income at 11%. We grew earnings per share 18%, and we delivered more capital back to shareholders, and we reduced shares in the aggregate by 3%. We produced an 89 basis points return on assets and a 14% return on tangible common equity in the first quarter. So let me hit on a few highlights that drove that performance. Net interest income grew 3% year over year and is up from quarter 4 to the high end of our guidance range we gave you 3 months ago. We grew deposits for the 7th straight quarter. They reached nearly $2 trillion at quarter end and have now grown 8% from their mid-2023 low point. We grew commercial loans in nearly every line of business. That is the second quarter in a row they've grown across the board. Holly O'Neill and our consumer team marked the 25th straight quarter of net new checking account growth. We saw annual flows to our consumer investments business of $22 billion over the last 12 months.
Tap the like button. It will share it out to more people. We're waiting to hear about XRP if we can.
Katie Knox in the private bank together added 7,200 net new households in this quarter and saw net AUM flows of $24 billion in the quarter. Jim DeMar and the team recorded the 12th straight quarter of year-over-year sales and trading revenue growth and achieved a 16% return on allocated capital. We generated these results working from a strong balance sheet with over $200 billion in regulatory capital and nearly $1 trillion in liquidity. This allows us to provide strong support and solutions for our clients. Turning to slide 3 on organic growth. One of the keys to our earnings improvement has been our ability to consistently drive organic growth. Organic growth remains strong across the businesses as highlighted on slide 3. I won't go through all the statistics and all the points on the page, but as you can see, the momentum has continued. I note the continued growth in net new checking, new households, new companies of commercial banking, and growth in our institutional markets business. Clients continue to see the value in our capabilities in connected businesses as a company. Our digital engagement and sales continue to expand across all our businesses. We saw more than $14 billion logins in 2024. Erica has now surpassed 2.7 billion interactions since its inception. Our Cash Pro app for our commercial customers has continued strong adoption and usage rates, as you can see. Transactions sent through Zelle at Bank of America are not only 3 times the number of checks written by our Bank of America customers, but also 1.3 times the number of checks written plus the number of cash transactions taking money out of the ATMs. It's also worth noting that digitally enabled sales in our consumer product business across the board reached 65% of total sales. You can see these trends on digital in the slides we show you each quarter on slides 26, 28, and 30 in the appendix, and we commend those to you. As you go to slide 4, we showed you some of the highlights in economic activity. Provide some of the current spending data by our consumers at Bank of America. There's a lot that could potentially change given the uncertainty around the tariffs and other policies in the future path of the economy. In our communications with all of you, just as we've done during other stress periods, we want to relay to you those facts which we think give you some context. But before we do that, our research team, like many research teams led by Candace Browning, does not currently believe we'll see a recession
Thank you very
in
much.
2025. However, they've lowered their GDP growth rates for 2025 and continue to see no rate cuts during 25, but expect as inflation gets under control, you may see them in the future, i.e. in 26. But going more to what our customer data shows, it shows that the money moving across all our consumer spending methods, debit and credit cards, ACH, checks written, Zelle, etc., all that aggregate shows it grew about 4.4% pace in the first quarter of 2025 compared to the first quarter of 2024. As you look in the chart and look across it, you can note that consumer spending has been consistently growing year over year.
We're 3 away
bit,
on X for 4,000 followers. Who's going to be 4,000? Here is the link on X. Click on it now. See who becomes 4,000.
About a 4% pace, and that pace has continued.
Links in the chat.
That pace has also continued through the first part of April. We note that some retailers may say that their sales are slower and others are picking up, and it really reflects a change in consumer spending behavior. But in the aggregate, the consumer keeps pushing money into the economy. As we look at our business side and what our business clients are telling you, in the current setting, they remain profitable, liquid, and have strong results. They all look ahead and worry about the same things that you hear reflected in your conversations with them also. So we continue to watch the environment actually changing, but we thought it would be good to share with you what we're actually seeing on our customer base at this moment. So in summary, for Bank of America for the first quarter of 2025, I want to thank the team for another strong quarter. We saw good organic client activity. We enjoyed good growth in revenue and earnings. We continue to invest in the future growth of our company. We managed the risk well. That drove healthy returns for you, our shareholders, and we increased the capital delivered back to our shareholders. With that, I'm going to turn it over to Alistair to talk you through the quarter.
Thank you, Brian. I start on slide 5 of the earnings presentation to provide a little more context on the quarter. And as Brian noted, we generated $7.4 billion in net income, or 90 cents per diluted share this quarter. And that represents good growth over both last quarter and the year earlier period. On slide 6, we note some of the highlights of the quarter. Revenue of $27.5 billion on an FTE basis grew 6% from the first quarter of 24. Most revenue items showed improvement year over year.
Great beat on J&J, Johnson & Johnson.
And brokerage fees rose 15%, with both assets under management flows and market levels contributing nicely to the growth. This quarter's $5.6 billion in sales and trading revenue grew 9% from the year-ago period. Service charges grew 8%, with particular strength in our global payment solutions revenue. Card income improved 4%, and other income also improved, driven by gains mostly associated with leveraged finance positions, and these were positions that we disposed of during the quarter. Non-interest expense was $17.8 billion, up from the fourth quarter, driven by seasonally elevated payroll taxes and markets revenue-related costs of processing and incentives. Litigation costs were also higher, related to a recent decision in a long-running matter. With operating leverage this quarter, as revenue grew 300 basis points faster than expense compared to Q1 24. Provision expense for the quarter was $1.5 billion, with asset quality remaining in great shape. Preferred dividends were $125 million less than the first quarter of 24, as we redeemed some preferreds over the past year. And we used some of our excess capital to reduce our outstanding shares 4% from the first quarter of last year. All of these things aided in EPS improving 18% year over year. Let's move to a discussion of the balance sheet using slide 7. And you can see assets ended the quarter at $3.35 trillion. That's up $88 billion from the fourth quarter, driven by higher levels of client activity in global markets. In addition, loans grew $15 billion in the quarter, supported by a $24 billion increase in deposits. As deposit growth exceeded loan growth, we continue
Please
to
put in the chat how many XRP you have. We're seeing what everybody has.
$21 billion, driven by funding needs.
And also what country you're from.
Assets. Average global excess liquidity at $942 billion remains strong and up year over year. Shareholders' equity was flat with the fourth quarter, around $296 billion. And within that, we returned $6.5 billion of capital back to shareholders, with $2 billion in common dividends.
Thank you.
And the repurchase of $4.5 billion in shares. It's worth noting that year over year, equity is up $2 billion, and a $10 billion increase in common equity was partially offset by a 28% reduction in preferred stock.
Give me your price target
Book value
for XRP in the chat. I'll share it on the screen.
9% from the first quarter of 24. Turning to regulatory capital on slide 8, our CET1 level increased to $201 billion, and the CET1 ratio is 11.8%. This is down 11 basis points and remains well above our 10.7% requirement. You can see in the waterfall, we deployed capital in a number of ways this quarter. In addition to the increased amount of share repurchases, we allocated more capital to our global markets business and grew both consumer and commercial loans. Within the ending loan growth, it's worth noting we bought an $8 billion portfolio of residential mortgage loans that's both high in quality.
Doomsday Benny donated $1.99 through a super chat. Do not tell anyone how much you have. Be safe.
And we expect
it doesn't make any difference. I tell you every day I've got $300,000, $330,000 in my portfolio. It makes no difference. Be safe, but telling people you got a million XRP,
which leaves capacity for
we're a money channel. We talk about, we share everything openly.
Of total loss absorbing capital means our TLAC ratio remains comfortably above our requirements. As you see on slide 9, we've now grown deposits for the 7th consecutive quarter on an average basis, and we're near $2 trillion on an ending basis. Typically, we see some downward pressure on deposits as we move from Q4 to Q1 as commercial clients use their cash to pay bonuses and taxes. And this year, we saw commercial deposits more stable as clients remain highly liquid. In addition, we remain disciplined on pricing as we pass through short rate declines and saw a 24 basis point decline in rate paid in global banking. We saw continued stability around our consumer non-interest-bearing balances, and as interest rates moved lower in CDs and preferred deposits on our brokerage platform, we saw a 3 basis point decline in rates paid in consumer banking this quarter to 61 basis points. Overall, rate paid moved from 194 basis points in Q4 to 179 basis points this quarter, and we're lower in every business segment.
It's the conference call at the end.
Let's turn to loans by looking
when
at
they get questions, will they mention XRP or cryptocurrency?
You can see loans in Q1 of $1.09 trillion improved 4% year over year, driven by 7% commercial loan growth. Excluding commercial real estate, that year-over-year growth was 9%. We noted a modest increase in revolver utilization during the quarter as clients navigated.
Please tap the like button. It will share it out to more people. Get XRP to a banking world. You're only helping yourself. Thank you.
And the $8 billion of residential loans we purchased this quarter, and that I noted earlier, those will come onto the balance sheet. Well, they came onto the end of the balance sheet at the end of the quarter, so they don't really impact averages this period and will begin to impact them next. Let's turn our focus to NII performance and slide 11, where on a GAAP non-FTE basis, NII in Q1 was $14.4 billion. And on a fully taxable equivalent basis, NII was $14.6 billion. That's up 3% from the first quarter of last year. We finished at the higher end of our expected range, and NII grew $75 million on a fully taxable equivalent basis over Q4, even as we incurred approximately $250 million headwind from 2 fewer days of interest accrual. The improvement was driven by global markets activity, as well as deposit favorability and loan growth. And fixed-rate asset repricing also benefited NII. With regard to interest rate sensitivity, on a dynamic deposit basis, we provide a 12-month change in NII for an instantaneous shift in the curve. So that means interest rates would have to move instantaneously another 100 basis points lower than the 4 cuts already expected and contemplated in the April 10th curve. On that basis, a 100 basis point decline would decrease NII over the next 12 months by $2.2 billion. And if rates went up 100 basis points, again, more than the forward curve, NII would benefit by roughly $1 billion. With regard to a forward view of NII, given the uncertainty of announced tariffs, we've seen expectations for more cuts in interest rates and more variability now in the market expectations for economic growth. So let us provide a few thoughts for you using slide 12 to illustrate. In Q4, we provided our expectation that we could exit Q4 of 2025 with NII on a fully taxable equivalent basis in a range of $15.5 to $15.7 billion. And that included an acceleration of NII growth in the second half of the year. Our assumptions underlying that NII belief then included an interest rate curve, which anticipated 1 rate cut in the middle of the year and modest loan and deposit growth. And while the interest rate environment has changed a little, our current expectation for the exit rate of NII in Q4 remains unchanged. Using the first quarter 25 as the base,
please vote on the poll. Are you here for XRP or Bank of America?
Bridge to our Q4 25 expected exit rate. First, we pick up 2 additional days of interest, 1 in each of the next couple quarters. Fixed-rate asset repricing also benefits our NII, and it takes into account the impact of the current interest rate curve. There are 3 primary buckets for that benefit: securities, mortgage loans, and cash flow hedges. Security paydowns are running about $8 to $9 billion a quarter. Mortgage loans are another $4 to $5 billion a quarter, and each gains a little more than 200 basis points as they're replaced. Cash flow swap repricing benefits are a little more staggered in their roll down and make up the rest of the benefit here. We assume the early April interest rate curve, which reflects 4 cuts, and a couple are later in the year. So that will have some negative impact near term on our expected NII growth, but it improves as the funding costs more fully reflect those.
Welcome, Ashley French.
Ashley French has become a member.
Asset sensitivity, which again assumes instantaneous.
I'll give you all your perks and benefits at the end. Stand by.
Even below the rates cuts currently in the curve. We provide our best estimate using the timing of those cuts. And at the same time, with lower rates, we would expect just a little more loan and deposit activity, and we estimate the NII impact of that growth would offset some of the interest rate impact from lower rates. We already saw modestly better deposit growth in the first quarter than we expected. In addition, we believe our liability-sensitive global markets business will also likely benefit NII more as we move through the year, and that obviously depends on the way clients choose to trade with us. Bottom line, our fourth quarter exit rate expectation for NII is unchanged at $15.5 to $15.7 billion from our previous expectations.
Thank you.
And that means we're still expecting strong full-year NII improvement this year of 6 to 7%. Okay, let's turn to expense, and we'll use slide 13 for the discussion. We reported a little less than $17.8 billion in expense this quarter, and that included roughly $500 million in seasonal elevation from payroll tax expense and some markets-related, revenue-related costs. We also had higher litigation expense to $160 million, driven by a recent
XRP's now moving.
A long-running matter. And remember, as you think about the expense increase from Q4, that quarter included a $300 million release of accruals.
It's going up together.
Special assessment. Expense compared to Q1 24 is up a little less than 3%.
Tap the like button. Let more people know we're here. And we're linking to Bank of America. It's a huge thing. Tap the like button.
And wealth management fees, and in the investments made.
Share it out.
More sales associates, and to support increased technology and marketing costs. Let's move to credit and turn to slide 14, where our asset quality remains sound. Net charge-offs were $1.45 billion, modestly down compared to Q4. This is the fifth consecutive quarter that net charge-offs have hovered around $1.5 billion. The total net charge-off ratio this quarter was 54 basis points, flat with Q4. Q1 provision expense was $1.5 billion and matched net charge-offs. Consumer net charge-offs were $1.1 billion, consistent with the past few quarters. Now, 90% of our consumer net charge-offs are driven by credit card, which highlights the importance of prudence in underwriting that portfolio, as we note on slide 22. On the commercial side, we saw losses of $333 million, down modestly from Q4. Near term, we don't expect.
Thank you very much for joining me. Please tap the like button. It will share it out to more people. Thank you.
Late-stage delinquencies from the fourth quarter. That tells us that net charge-offs could even be a touch lower next quarter on the consumer side. On slide 15, in addition to the improvement in consumer delinquency statistics, note the modest changes in other stats for both our consumer and commercial portfolios. Okay, let's move to the various lines of business and some brief comments on their results, starting on slide 16 with consumer banking. For clients, consumer banking continues to deliver strong organic growth driven by high-touch and high-tech capabilities, convenience, and security. For shareholders, through NII in particular, this business is increasingly seeing benefits fall to the bottom line for its high-quality deposit book, with only 61 basis point rate paid on nearly $950 billion of deposits. In Q1, consumer banking generated $10.5 billion in revenue and $2.5 billion in net income. Revenue grew 3% from the first quarter of 24, as NII growth was complemented by fee improvement in card and service charges. Expenses rose 6%.
Stand by for full analysis, XRP analysis, XRP chart, and much
more. The organic
more.
Growth that Brian noted on slide 3 included nearly 250,000 net new checking accounts this quarter, another strong period of card openings, and strong investment account growth. Investment balances grew 9% to $498 billion, with full-year flows of $22 billion and market improvement. Consumer banking deposits continued to increase from their mid-August low. That was $928 billion, and it's now at $972 billion on an ending basis. Looking at averages, deposits grew $5.2 billion from the fourth quarter to $948 billion, and our rate paid declined to 61 basis points. Finally, as you can see in the appendix, slide 26, digital adoption and engagement continued to improve, and customer experience scores rose to record levels, illustrating the appreciation of enhanced capabilities from these investments. Moving to wealth management on slide 17, the business had another strong quarter. With a continued increase in banking product usage from our investing clients, the diversification of the revenue in this business continues to grow. The number of clients that have banking products with us continues to grow also and is now approaching 2/3 of the client base. Importantly, about 30% of our revenue remains in net interest income, which complements the fees earned in our advice-driven model, and those have also grown. Net income of $1 billion rose modestly from the first quarter of 24, as solid revenue growth was mostly offset by higher revenue-related costs and continued investments. In Q1, we reported revenue of $6 billion, growing 8% over the prior year, led by 15% growth in asset management fees. Expense growth of 9% supported both the cost of the increase in fees, as well as investment in technology and the cost of hiring to add experienced advisors to the platform in Merrill and the private bank. Average loans were up 6% year over year. That was driven by growth in custom lending, securities-based lending, and a pickup in mortgage lending. Deposits were relatively stable compared to Q4, and our pricing discipline resulted in a 25 basis point decline in rates paid. Both Merrill and the private bank continued to see organic growth and produced strong assets under management flows of $79 billion over the past 12 months, which reflects a good mix of new client money as well as existing clients putting money to work. We also want to draw your attention to the continued digital momentum that you'll find on slide 28. Our new accounts continue to be predominantly opened digitally. On slide 18, you see the global banking results and the loan and deposit gathering success of the team. In the first quarter, global banking produced earnings of $1.9 billion, modestly lower than the year-ago quarter, as lower credit costs from CRE office losses were more than offset by higher expense of investment in the business. Revenue of $6 billion was flat to the prior year, as lower NII was offset by roughly $230 million higher other income related to leverage finance positions, as well as higher treasury services revenue. Firm-wide investment banking fees were $1.5 billion in Q1, similar to last year's first quarter. We maintained our number 3 investment banking fee position, and looking forward, we've got a healthy pipeline, and our clients are simply waiting on more clarity on trade policy and the regulatory environment before committing to deals. Expense increased 6% year over year, driven by continued investments in technology and operations to support clients. On the balance sheet, we saw good client activity. As I noted earlier, we saw good growth in commercial loans, mitigated by decline in CRE loans.
Please, if you could tap the like button, it will suggest it out to more people. We are really looking for a relationship here between Bank of America and XRP. I'm trying to support XRP to help people. Please do tap the like button.
Switching to global markets on slide 19, I'll focus my comments on results excluding DVA as we normally do. As Brian said, we continued our streak of strong revenue and earnings performance, achieved operating leverage, and continued to deliver a good return on capital. In Q1, we earned $1.9 billion, and that grew 8% year over year. Revenue, again ex-DVA, improved 10% from the first quarter of 24 on good sales and trading results and $230 million of other income on leveraged finance positions similar to global banking.
This is great. They're going up together.
On sales and trading, ex-DVA, revenue improved 9% year over year to $5.6 billion. Equities led the way this quarter, growing 17% year over year, while FICC grew 5%. Equities and FICC both benefited from increased client activity among the market volatility. Year-over-year expenses were up 9% on revenue improvement and our continued investments in the business. On slide 20, we show all other with a loss of $4 million in Q1, and the driver of the year-over-year improvement in expense and net income is the absence of the first quarter 24 FDIC special assessment. Our effective tax rate for the quarter was 9%, which reflects the discrete impact of share-based compensation awards. As a reminder, our tax rate remains well below our typical corporate tax rate, driven by tax credits related to investments in renewable energy and affordable housing. Looking forward, as we said last quarter, we expect the tax rate for the full year 2025 to be in a range of 11 to 13%, excluding unusual items. So let's shift gears to finish, and we'll use slide 21. Over the last couple of weeks, investors have signaled concerns for the bank industry over potential changes in the economy. And in light of that, we added the next few slides to illustrate how much stronger our risk profile and balance sheet are today for whatever economic outcome we might face. And let me offer three important takeaways as you see the next three slides. First, we have a vastly improved risk profile from previous periods of economic dislocation. Second, at the same time, we strengthened the balance sheet by adding billions of capital and liquidity. Third, following 15 years of operating under responsible growth, our portfolio and our balance sheet are well prepared to support our clients in various economic outcomes. Now, the left side of slide 21 highlights the shift in the loan portfolio to a more balanced mix of commercial and consumer, as well as a more geographically diverse mix. Our high-quality commercial loan portfolio at this point is more than 90% investment grade or collateralized, and it also includes a more diversified geographic mix, as you see at the bottom of the page. At the top right, you see the improved mix toward a more...
We're trying to support XRP here. Please tap the like button. It shares it out to more people. Try to bring the real news, not the made-up news just to sell videos. We're investigating Bank of America. Tap the like button. Thank you.
Stressed loss ratios fared in the Fed models and CCAR exams. And we compare quite favorably to peers in each of the past 12 years of exams. CCAR provides investors an annual independent view.
They're going up together, separate from the S&P 500.
So just to recap, if you went to the latest results from 2024, those scenarios include a drop of 6 to 8% in real GDP from peak to trough. It includes a rapid increase in unemployment up to 10% and significant changes in inflation. It also assumes housing prices falling 35%. It assumes short rates basically go to zero and the 10-year goes to 1%. And it assumes bond spreads widen dramatically, commercial real estate prices decline 40%, and equity prices would drop by 50%, together with significant weakness in international economies. It also assumes the portfolio size doesn't change from any management actions that we might take in that environment. And we obviously do quite well in that CCAR-stressed environment.
I've got an XRP chart coming up after this for your buy zone, sell zone, support level. Stand by.
Thanks, Alistair, and I'm on slide 22. On that slide, we highlight some of the key balance sheet or asset quality statistics that the company has faced in important periods of economic disruption, and we compare those to the current status. On the left side of the columns, you can see that the fourth quarter of 2009 illustrates what the company looked like after a couple of years in the financial crisis and after the acquisition of Merrill. Second column, obviously, is fourth quarter 19, which represents what we look like heading into the pandemic. And now we show you what the company looks like today. We have a multifarious loan book across types of clients, geographies, and various asset classes. That holds us in good stead. In total, our consumer loans are down more than $200 billion, as home equity loans are down more than $125 billion, and credit card loans, unsecured credit card loans, are down by more than $60 billion. This reflected a concentrated effort on us to focus on our relationship loans rather than loans as a product, and deepen those relationships with the highest quality prime credit customers. Our wealth management business has doubled in size in those consumer categories, and the relative exposure to those borrowers in those loans is very secure as are highly collateralized.
Thank you very much. We might hit 77,000 during this show. Thank you.
In the commercial area, in addition to the more geographic dispersion that Alistair discussed, you can also see that the construction lending and land development exposures have been greatly reduced. At the same time, our equity is $93 billion and higher. At Bank of America, we remain obdurate about our strength of our balance sheet. We are well reserved for our portfolio and risk profile. On a weighted basis, including our model reserves, our imprecision reserves, and our judgmental reserves, it positions us at approximately 6% unemployment rate. The current reserve allocation on card is 7.4%, for example, against a charge-off rate of around 4.4%. When you go to slide 31, you can see some more statistics about our portfolios. Excuse me, 23, you can see more statistics about our portfolios. Let's take a deeper look at those in just a couple of points.
I've got a full technical chart analysis for XRP coming up. Stand by.
Second lien products today, we have a total of about $260 billion. On average, our borrowers have FICO scores above 770, and average debt-to-income ratios of 35% for the residential mortgage product and 39% for the home equity product. Loan-to-values also leave us in strong equity positions, being below 50%. For comparative purposes, we entered the financial crisis in early 2007.
Tapping the like button is working, folks. It's sharing out to more people, and we've got a chart analysis in a moment. We're nearly at 1,000 people watching now. That's because you're tapping the like and sharing. Thank you so much.
Lower credit scores and higher LTVs. So we've significantly repositioned those portfolios across the last several years. Moving through the other consumer loan types, you can see the high quality of the collateralized securities-based asset lending and auto portfolios. And on consumer credit card, we have about $100 billion in outstandings with a current net charge-off ratio, as I said, about 4%. The FICO score of our average borrower is 777. And thinking about exposure borrowers of less than a current FICO score of 660, we have about 12% exposure. Card is really our only consumer unsecured exposure in the portfolio. As comparison, heading into the financial crisis in fourth quarter of 2007, we had $150 billion in credit card balance, about 1.5% of 1.5 times our current balance of card loans. The average FICO score was 50 FICO points lower, and the unused lines of those books were much, much higher. This strong position allows us to better serve our clients in the times of stress, which may come ahead according to our projections. Bank of America stands ready to support them as never before, whether it's a commercial client which needs help to borrow and navigate the changing economy around the world, whether it's a commercial
Thank
client.
you for all your support. This is getting out to more people, and XRP is going up. Wonderful to see.
We'll be there for them.
Everybody working together. I love it.
On rocky periods or loan to get them through, we're there for them. If consumers need access to cash or borrowing, we're also there for them.
That's the power of the Lucasade Army.
Company in this way
Amazing.
Allows us to stand tall in times of stress. And these slides highlight the importance of having done that across the last many years and the relative strength of our company compared to others. Thank you, and now we'll go to questions and answers, Q&A.
Right, Q&A is what's important.
Certainly. At this time, if you would like to ask a question, please press the star.
So we're now going to go to Q&A. Tap the like button, click the share button as well. Get more people watching Bank of America. This is important. This is where we believe there's a connection with XRP. Q&A is important. We've got charts coming up at the end, and then a big day on the markets for the opening bell. Thank you. Here we go.
Hi, good morning, Brian. Good morning, Alistair.
Morning.
So appreciate you guys taking my questions. Wanted to start off with one on capital management. Certainly encouraging to see the acceleration in the buyback towards that $4.5 billion level. At the same time, you're still running with more than 100 basis points of cushion. And was hoping you could speak to, given the uncertainty in the environment, what level of CET1 you're currently comfortable running with in terms of the ratio, and whether this $4.5 billion buyback level is something that we expect to be sustained over the near to medium term.
Yep. So, Steve, if you look at what we did this quarter, just take a look at slide 8 in the earnings materials. You know, here's a quarter where we ended up earning $7 billion. And, you know, it allowed us to step up the share buyback from $3.5 billion up to $4.5 billion in an environment where we also invested more RWAs in global markets and into higher loan balances. So not only did we, grow the loans, I'll call them organically, but we also purchased the loan portfolio this quarter. So
going to give you all the links you need in the chat. There's my X and Instagram if you'd like to follow me for all my trades before you hear about them anywhere else. There's the membership link.
I don't think we have an ultimate
and Discord now is premium only. There are no more free accounts. It's a couple of bucks to be a member, free training videos, the whole thing. plus all our trades. Talk to Sensei, Ed Nevius. Please do not click on the link unless you are looking to become a subscriber. There are no more free ones. Everyone that's a member has got the free ones. There's no more free ones available.
And for my
so I can
follow-up,
provide the
just
best
on
service.
the outlook for loan and deposit growth, you delivered better growth across both KPIs relative to peers. I was hoping you could speak to what drove the strength in 1Q beyond the portfolio purchase you alluded to earlier, and just bigger picture, the outlook for commercial loan growth as tariffs and policy uncertainty have certainly raised concerns regarding weakening loan demand, weaker CapEx, what have you.
So, Stephen, just on the, I'll give you the broader thing, and Alistair can talk about some of the specifics. You remember over the last several years, we've been investing in basically building out more commercial bankers across the world, including build-outs in Switzerland and in the UK and things like that. We built more commercial loan officers in the United States in our global commercial banking business under Wendy and the team. We've grown more private bankers and more in the wealth management team under Merrill, what we call wealth management bankers, to support those teams. We've grown them. So those investments are sort of kicking in on that sort of 20-mile march way, just more of them, and that just keeps driving it through. So that's why you're seeing us sort of do better in the competition just in linked quarter loan growth. When we look forward, with all the things you described, the potential changes in the economy.
Come on, XRP.
People draw.
Let's get to 1,000 watching. Everyone tap the like button and share it out to more people. We're trying to find the connection between XRP and Bank of America.
Our capabilities is
you have to do the research and turn up early in the morning.
Honestly, also making that capacity more efficient using some artificial intelligence, machine learning to direct that calling capacity, and that's allowed us to take what we call new logos in the commercial business, adding new companies for the first time, and you're seeing that having started a couple of years ago is now maturing into balances and outstandings, which it takes a while to bring those clients in, get them underwritten. They renew once every couple of years, get in the flow, et cetera. So those investments are paying off, and we expect that to continue across the board.
That's great, caller. Thanks so much for taking my questions.
We'll move next to John McDonald with Truist Securities. Your line is open.
Thank you. Hi, good morning, guys. Thanks for the longer-term perspective on the credit. Just wanted to follow up that. On terms of the loan loss reserve, what were the dynamics of the setting of the reserve this quarter in terms of, was any change in weighting of scenarios for the tariffs, and was it set with a 3/31 view or early April view?
So, John, we set it all the way through the close, but normally we're focused on the data that we have on 3/31, and then we have the ability to layer on top after we model our reserves. We have the ability to layer on imprecision and judgmental on top of that. So we did this quarter the same way that we've done in other quarters. We went through and assessed using the blue chip economic indicators, so the consensus view of all of the various macro assumptions. That's sometimes different than others who use their own proprietary. We feel like the right answer is to use the blue chip consensus. It's more independent. And then we've got that as our baseline, and we've got 4 other scenarios around that. We've got upside and 3 downside. And so in this
I'm working on it, Dennis.
Quarter, already the
I've been on a few calls. I'm working on it. Don't worry. I'm on it.
In terms of economic growth.
Building the relationships
lower in the
for the Lucasade Army.
And a little higher on inflation.
Some things take time.
So that's reflected in the baseline before we even get to the weightings. And then the weightings this quarter, those are unchanged for us. And by the time we then take that modeled answer and then layer on top of it the judgmental piece all the way through the close, we're reserved closer to an unemployment rate that's right around 6% in 25, 26, just to give you some idea. So that should give you an idea. We feel like we're pretty well reserved at this point.
Hey, John, one of the things, we've been looking a lot at sort of what happened because obviously CECL came in, the pandemic hit, sort of the buildup and things like that. But, as Alistair
technical
said,
XRP chart coming up at the end. Stand by. Lots more information to help you.
Negative over the last couple of quarters, obviously, due to the outlook or last couple of months, and we'll continue to reflect that. But we have a strong reserve position with that when you add it all up at the 6% implied level. So we feel good.
Thanks. That's helpful. And then on expenses, you previously were looking for the full year expenses this year to be up 2 to 3% over last year.
XRP official shop. We've paid for the official logos. Links in the chat. Yep, MartynLucasShop.com.
John, I mean, I think we said 2 to 3% for the full
These are
year.
the official logos we paid for the licenses.
It might be towards the higher end, but we just got to see what happens with fees over the course of this year.
Got it. Thanks.
We'll take our next question from Jim Mitchell with Seaport Global Securities. Your line is open.
Great. Good morning. Maybe, Alistair, you were able to absorb 4 cuts this year in your assumptions and maintain the 4Q NII target, which is a good thing. But as we think about the full impact of the 4 cuts felt in 26 and potentially a few more, does that make it a little more difficult to reach that intermediate term target NIM of 1.3% by the end of next year, or the fact that you're getting them out of the way this year is helpful? Just trying to think through that intermediate term target. Thanks.
So, Jim, first of all, that target's 2.3, not 1.3. So,
I'm sorry. Yes.
Yeah, you're letting us off the hook here pretty easy.
Yes, right.
No, we're aiming at 2.3%, and we still feel like over the course of the next couple of years, that's the right answer. For this year's NII, those rate cuts, we got 4 of them in there, but a couple of them are later in the year, so it doesn't have a tremendous impact on 2025. It'll be a little bit of a headwind in 26 if that, in fact, is the case. Right. But, again, we got a lot of time between then and there. I feel like last year at one point we thought there'd be 1 rate cut in the curve. Then there was 6. Then we were back to 1. So we got to see how the interest rate curve develops. But our management team's focus and goal has not changed.
Nice.
Yeah, and, Jim, one thing on the rate sensitivities, remember those are instantaneous drops, and it takes time for the fixed our debt portfolio, our debt issuance portfolio. Some of it's floating, some of it's fixed. It reprices over time. So if they come more over time, you can't quite equate it to the instantaneous drop type of things, if you got my point, because you have other dynamics which help. So, remember that long term, most economists believe that with inflation coming back towards the target rate, you'd see the Fed funds rate ultimately get down to 3.5 type of levels, which is more of a traditional, normal, it's hard to say in the world we're in now, level. So if that happens, we feel very comfortable. If you look back historically, the earnings power of this company and the NIM percentages.
MartynLucasShop.com. We've just released limited edition, limited supply of our official paid logos. XRP phone cases. These are the official ones with our logos on the back and XRP. There you go.
What are you seeing across
for any iPhone or any Galaxy, Android?
Deposit, flight
links
to
in the
safety
chat.
Flows, and the volatility in trading. Has that been good volatility, bad volatility? Just trying to get a little window into the near term. Thanks.
Well, we've seen significant pickups in customer activity in global markets, so the environment there remains constructive. We have seen, I'd say, continued deposit, sort of similar to what we would expect. We haven't seen anything like, if you were to go back a couple of years around regional banking crisis, nothing like that. It's been pretty regular way, I would say.
Whoosh.
Driving the deposit day today.
And Jim, I mentioned it earlier, but just you did specifically.
Good day for the markets when the banks win like this, which means crypto go up too later on.
Spending, if you take a
please tap the like and share this out. It's a great day. We're nearly at 1,000 watching live. Please tap the like. This is a great day.
Where Easter fell this year versus last year and all that stuff, but basically, it's maintaining that pace. So the consumers are still solidly in the game. What they'll do next, different question. But right now, they're still solidly even to the first part of April.
Okay, great. Thank you.
We'll move next to Glenn Schorr with Evercore. Your line is open.
Hi, thanks very much. So another good trading quarter for you guys. But I'm curious, when you benchmark yourself, say, to the top peers, there's probably about a $3 billion difference to the biggest platforms. I'm just curious if you see those big gaps to peers, are those gaps that you're choosing to pursue? You mentioned you have the SLR room, you have a great equities franchise. I'm just curious on your approach towards, is it a capital thing? Is it a risk thing? I'm just curious on the high-level thoughts. Thanks.
I think, starting a number of years ago, this has been a relentless climb up the ladder and not overshooting it and having to cut off. So that 3 years of year-over-year growth, consecutive quarters, that other people don't do because there's more volatility. So Jim and the team have basically building up. So what have we done? More capital, probably over 5 or 6 years, $300 billion more balance sheet capacity. Even over this quarter was $60-ish billion. So we keep adding capabilities, capacity. But remember and we've a relentless march. Fourth, third in this category, third, second in this category. We keep moving up. And just keep pursuing it. In some areas like physical commodities, that's not a business we're heavily into, and we made a decision about that a number of years ago versus core fixed income where we're stronger and we've been gaining share. So the idea is to keep gaining share, but at a pace, for lack of a better term, in the business which has volatility in it, a pace that capitalizes that that volume of revenue into the business and then grows from there, as opposed to grabs it and gives it back and grabs it and gives it back. It's just the way that Jim and the team have driven it, and they've done frankly a very good job doing it. And so expect us to keep gaining share. We'll keep closing the gaps that you mentioned. It's getting closer to the third place gap, but in a given quarter, other people may shoot up a little higher because of this element or that element. But our job is to just be consistent across all the elements that we participate in, and keep driving it, and there's plenty of opportunity ahead, and it's not for lack of capital or lack of risk-taking. They're taking more risk, and the other major thing is the investment in systems here is a competitive moat, frankly, that the amount of work you have to do to get
I've got a big breaking story coming up.
Very few of us can do it.
On Apple.
I very much appreciate that, and similar to what John said, we definitely
this will be our big breaking story today.
Detail around the credit book, and
you're going to like this one, folks.
I'm curious on the right now.
Market will go up today.
Reserving, and you're
guaranteed
to give us the further drill down on the exposures.
I'm going to set this up in a minute.
A traditional, regular way we're marching towards or closer towards our higher likelihood of recession, or have you gone through and assess the loan book from exposures to this shifting tariff and tax environment, and that's bringing the higher attention? I hope that the question's clear. I'm more talking about the why now and what's driving the increased attention.
Well, the why now of why we put the extra disclosure is just to remind people, we actually, if you look back, Glenn, we did a lot of this around in 20 because of the same discussion came up, and then in 22 or 3, there was the same discussion about we're heading into recessions, consumer are going to spend down their money, the consumers quit. Turned out not to be true, frankly, in the 22, 23 time frame, the consumer held in. So if you look, we always are testing every, on a continuous basis in a trading book stress test, but on a quarterly basis across the things. If you think about all the different ways the economy can get knocked into recession,
big story coming out.
Lower growth.
World exclusive, just getting this through the wires. No one's talking about this.
That's all the street, our economists, et cetera. So that the growth is slowing down from a 3% growth rate in the third quarter of last year, to one-ish, type of numbers. They're a little bit less than one this year in the blue chip in the first quarter. So over 2 quarters, a pretty good drop. So that's all embedded in it. But why we're trying to give you reassurances or a look at the in-depth is because it's a source of strength for us, and we've been working at that hard.
Yeah, it's great
to ensure
it's really good media. It's really good.
Bumps in the road as we go.
It's very good for the wider market.
Economic downturn.
Expect the market to go green today.
That every quarter.
As soon as we get this news out, this is fantastic.
You sit there and say, what happens if tariffs happen, this happens, It's going to result in either GDP negative growth, higher inflation, which may
banks
then
are doing
cause
well.
Negative growth, higher unemployment.
Expect a green day
all
today.
Those are the factors we actually test in granular detail. So it's not necessarily how you get there; it's the outcome of getting there. The GDP fall off, housing price fall off, unemployment levels. That's what we do, and we want to make sure we are positioned. At the end of the day, that we could serve our clients well and not have to be, pulling back. And so that's where the underwriting discipline of the last decade holds you in good stead if, in fact, we do enter a recession in the future.
Can everyone tap the like button? We might just get to 1,000 people watching live, which would be amazing for a big exclusive Apple
Mike
event.
Mayo with Wells Fargo Securities.
Just after this finishes.
Your line is open.
Hey, Brian, I'm hearing this call, and this almost sounds like it could have been the fourth quarter earnings call. Loans are growing, deposits are growing, credit's fine, consumer spending's slowing but still growing. You're buying back more stock, and I'm just trying to reconcile the $7 trillion of lost stock market wealth with comments from you. Sounds like you're not blinking. And by the way, I don't think you're alone. It just seems, more upbeat relative to what the stock market's done, and I'm trying to reconcile those two things. So what am I missing, or what are you seeing, or at what point do you say, hey, wait a minute, this is really might be a bigger problem?
I think, Mike, you're laying out the difference between is and could and might and should and future, right? So, what we're trying to do is make sure people see what is going on today, and like you said, and that's why you actually split the
Whoosh, look at this. It's going to be a great day. You wait till the Apple news comes out.
Credit's good. Charge-offs went down.
Bank's doing well. This is good.
Down at the end of the quarter versus fourth quarter. You're looking at all that and saying, okay, that's what
I'm
we
excited.
did. Then if we look forward, our economists, your economists, I'm sure, are all predicting a slowdown in growth. And the core question will be when all these different policies and stuff come together in response to the policies by other trading partners, to the tariff policies, by the policies on deregulation, working for that, the tax bill which comes out, all that will mix together and come to an outcome. And our job is to have positioned the company well and take advantage of the opportunities. Well, that outcome hasn't happened yet, and when it comes, be in a good position. And that's why this latter part of this was geared to showing you the strength of the credit portfolios and other things. At the end of the day, you and I know that the real risk in a balance sheet of a bank is going to be its credit posture heading into a general recession. Our colleagues have raised their probability recession, lowered their growth, as have the blue chips. But even if you look at the people who did it, it's a very slight recession, and we should fare well in that. But we just don't. Nobody has a perfect crystal
it's all going up now.
To the future, but
there we go. Big green day. I've got the big news coming for you. This is going to be a great day. You don't want to miss what I've got for you shortly.
Let me take the other side of that. I thought the idea was to make it easier to do business with deregulation. And you can see the nominations, people, and then you get the policies. If that narrative plays out, how do you think it'll be easier to do business at Bank America?
It's great sharing it, Stephen.
With your customers as it relates to deregulation.
1 minute to go.
The new administration has made it clear that they're going to reduce the regulatory burden along two dimensions. Dimension one is, I think, less regulations, new, and getting other regulations off the book and refining them based on the view that the pendulum's going too far. I'm now talking about banking regulations, but it's actually more broad across. The second way is actually reduce the size of the federal administration that brings the regulatory inquiries and things like that. So we're seeing some relief. We look forward to seeing more relief as the nominees get in position, and the policy outlines can be then drilled throughout the teams. But
make sure that you tap subscribe and you've set the bell to ring. You don't want to miss my news today on Apple. Make sure it's set to all. You don't want to miss it. You can go and check that now.
The regulation gets in the way of that and way overshot, the issues, and we look forward to having it come back in the middle. And
there it goes. There it goes. I said it was going to go. Didn't I say? Didn't I tell you?
Capital to level.
Great day today.
Assets and treasuries and
big day today.
Cash.
I hope you're in. There it is.
And
I saw that coming. 100%. Didn't I say 100% going up?
Help us provide liquidity to our clients.
I'll tell you why in a minute.
Stress, but remember our cash and our government-guaranteed securities and government-issued securities is $1.2 trillion of our balance sheet right now, Mike. So you think about that in terms of capitalizing that under the SLR.
Bank of America, absolutely soaring. Huge beat, up nearly 5%.
That has any risk attached to it,
Markets are going to love it.
So
Big
that's
Apple
one thing.
news
Second
coming.
thing
No
we saw
one's
to get
talking
this
about it
quarter
because it's just been sent to me.
The operational cost to deal with.
You won't hear it on Bloomberg or CNBC yet for another couple of hours.
That we tried to talk the last set of administrators
Look at that.
into you're going way
XRP's
too far.
going up with it. I'm loving it.
Into form, is a cost that we're going to
Tap the like button.
system and ought to be reinvested in helping our customers and clients grow.
Make sure you've rung the bell and subscribed.
And short follow-up, the $1.2 trillion in cash in government, where would that be kind of in a more ideal world in the operating cost?
I got shivers.
How much of that could potentially be saved?
$1 million portfolio in waiting.
Order of magnitude.
Yeah, I'm not sure it would be tremendously different.
Love it.
By hundreds of billions of dollars, but I'd say a few $100 billion of its pure size that we all added to meet a bunch of metrics that I'm not sure as important as
there she
people,
goes.
May think they are. And that's proved out. So think of that as our long-term debt posture being up higher, et cetera. So, our job is to, we got $2 trillion of deposits, $1 trillion of loans. We need to extract the value of that deposit. Our size ought to be more generated by that question, less about, we want you to just
a bank moving like that
sure that
is great.
Treasury, the market for repo of asset-backed securities will be available in a time of stress, or even treasuries, and so therefore you have to hold more capital and more term funding against it. Those are the things I think.
We'll end the poll soon. Please make sure you voted.
Our long-term debt footprint coming down relative size, and our sheer size coming down, I don't know, $150 billion maybe. I think, Alistair, probably be a good guess if we've grown really just fluffed up the balance sheet to make metrics that are not that important look good.
Ooch, it's even better than I thought.
We'll move next to Erica Najarian with UBS.
Yeah,
your line is open.
This is going to be big. No one knows why it is. I know why it is.
Understanding that there's a lot of potential moving pieces in the regulatory agenda or deregulatory agenda, I did notice that at the end of the year, your GSIB score would indicate that if you didn't take down your exposure this year, you would have a higher GSIB surcharge by January 1st, 2027, from what I understand, all else being equal. I'm just wondering, Brian and Alistair, if your plans are to reduce this exposure, or the message is, look, our ROTCE is 13.9% and improving, and so, crossing is not going to be a big deal because of the PPNR and return power that we see going forward.
So I think that relates back to, I think it was Glenn's question about the markets business, if I remember who asked it. At the end of the day, most of what drives that change is the markets business. There are other factors, obviously, Erica, but the big factor is the markets business. And if they're out there getting market share and getting the return on that, we'll keep growing through that. That's, in effect, why we have gone up, the chunk we've gone up. Now, go back to sort of Mike's point, and frankly, I think embedded in your question. Think about the facts that the GSIB calculations, at the time they were set, I think it was off of 12 data or something like that, 2012 data. The idea, and it's right in the rules, was that they should be indexed so that our relative position, Bank of America, relative position to the industry and the economy, we ought to be able to grow. We've had a nominal economy growth of 30% since the pandemic to now, just sheer size growth, of which there is no adjustment in the GSIB calculations for that. It was in the statute. It hasn't been implemented. You've heard in some of the even discussion by the Fed that they would index a lot of that. One of the proposals was from sort of now forward, which then skips all the growth. Our belief is it should be indexed, more fairly as designed in the statute, because our relative
free
size
chicken
hasn't grown, even though our balance sheet's grown to the economy or to the industry. So why are we more GSIB sized than we were before? So I think that's the two sides of trade. Yes, if the market business can get the returns and grow and do it in a way that sticks to the ribs, Jim and the team will grow.
Tish said she's zooming in on my back screen.
Back up and
very clever.
The reality of it, you're now looking at Bank of America. Circa 2000,
that's good. I'll give you that.
15 off of 2012 data, if I remember the exact date. and think about the sheer size of the U.S. economy, probably 50, 60% bigger, and we have not indexed anything for this, and therefore we're shrinking our banking size relative to the economy for the same, without kind of a logic behind it, and that's what we've been pushing about.
Got it. And I'll follow up offline. Just wanted to squeeze my second question in. Follow up on the net interest income outlook for the fourth quarter. You helped us with the exit points on both balance sheet and net interest margin in the last call. If I recall, it was flat to fourth quarter levels in 2024, and I think a 205, 210 net interest margin.
Huge day. Loads of good stuff coming.
Still, still valid in terms of what's underneath the surface of that 4Q25 exit NII? Obviously the balance sheet is bigger because of markets in the first quarter.
Yep, I think you've captured it, Erica. You're exactly right. That's we're comfortable with.
J&J, huge beat.
Great.
Oh, there's so much good stuff. I can't get it out.
Our next question from Matt O'Connor with Deutsche Bank. Your line is open.
It is exactly what we said, though,
good morning.
so I shouldn't be so excited. It's just nice to be right. Again.
Slide 8 here has a really good walk on
I love it.
The capital and the puts and takes.
Oosh.
And I guess I want to hone in on the RWA growth and just think about that going forward. Obviously, there's some increase in 1Q from seasonal stuff in markets, but maybe it won't be as much going forward, and the loan growth might pick up a little bit. But what I'm getting at is it's not that clear to me that you're going to use all the capital that you're generating and the excess from organic growth. And it does feel like the buybacks at some point will be at a pretty robust pace. So anyway, long question, just to summarize, talk about the capital consumption in a little more detail from the organic growth.
What a day. What a day.
So, Matt, I think you sort of answered your own question in the question, because you could see that a $16 billion RWA increase in a quarter where markets tends to be bigger just because of the nature of it. So that's on 1.7 trillion, so less than 1% growth in RWA, and and the earnings growth through. So we will always
I know,
deploy
mate.
Capital into
got to get used to it, innit?
At whatever they need to grow
again, right, again. And I've explained why we're right nearly all the time. It's not because we know more. It's just because we tell the truth and we haven't got an agenda. It's not hard to make money on the stock market. The hard part is to keep it. I explained yesterday. There's your XRP, folks. Delivered as promised. Biggest sector in the stock market, financials, energy. Told you. Sit back and count the money.
And then we turn around and say, what do we do with it? Well, you have
I love it. Great. I'm glad for all of you. I don't own XRP, as you know. I'm just here to help.
To $4.5 billion. Just meaning the first quarter.
Okay, and then that's helpful. And then just separately, that all other fee line on a consolidated basis was pretty close to breaking.
We're 40 away from 1,000 watching live. Can everyone tap the like and share button, and we'll do it. And then I'll go to the big news and the technical charts for XRP. Come on, everybody. It's a huge day. Tap the like, click the share. Let's get it going.
Other income line this quarter.
30 to go to 1,000 live. Pretty brilliant. What a day. What a day.
Tax credit activity.
Pumped, promised, pumped, delivered.
Timing of the completion of really long-dated projects. Could be
solar,
wind farms, could be housing.
Again.
So in any given quarter, there can be some timing there.
Should be illegal to make money this easy, shouldn't it, really?
But in this particular quarter, in addition to that, we've got the leverage finance positions that we referred to. We'd written those down in prior quarters. So when we sold them this period for a gain, that accounts for a reasonable amount of the delta.
Well, we're not counting because we're not selling anything. We're not selling a single share of anything.
Legal settlement, pretty long dated one, got that cleaned up. A little bit of Visa B cleaned up this quarter. So there's some one-timers that offset that, but it's probably worth about 3 cents this quarter, just to give you some idea.
Okay.
Rocket Labs up 10%.
We'll take our next question from Betsy Graseck with Morgan Stanley. Your line is open.
Hi, good morning. How are you doing?
Pump promised, pump delivered.
Excellent. Great
Love
quarter.
it. Just the beginning as well.
Quick questions. One was on, Brian, earlier in the call we talked about how some of the commercial loan growth was being generated by the investments you've been making, in particular, one of the areas, international. So I just wanted to, with this tariff overhang that we have going forward, how do you think about that investment spend in the international markets? Do you step it up? Do you pull it back? Is it an opportunity? Is it a threat, a risk? Just wanted to understand that, angle from you. Thank you.
So I think a lot of that's to be played out. That we would continue to invest where we see the opportunities, and where we see opportunity outside the United States is with the teams that we have.
Well, we've got 600 likes.
Countries, Japan for
nearly 1,000 watching live. Amazing.
World War II ended. India for 65
so
plus
close.
years. Australia for 60 plus years. The European countries for many years. We're deeply embedded in those countries, and the idea was we basically are coming from pure multinational, largest companies and those national champions, and taking them around the world and taking companies from outside that particular country into those countries. We're now moving down a notch in size. Strong, family-owned businesses in the production supply chains for business we understand. And I don't think that'll change dramatically. The goods and products still have to be produced, and so we'll continue to work with it. We're watching our clients and helping them try to figure out, what this all means to them in terms of supply chain alignment and things like that. So I think it may ebb and flow, but remember, when you then take the other side of where the investment is in the United States, that's where it's just a larger factor in terms of the overall commercial business, meaning small business. We're the largest small business lender in the United States by quite a bit. And those loans are growing.
What a day.
Meaning FDIC loans.
Look at this.
Which we both have in our consumer business and our business banking area. And then middle
spot
market.
On with this.
Largest, one of the largest lenders in the United States, and then large corporate. So we because of the diversity of our company, we'll see what might not be as possible in a place due to the dynamics you're describing, maybe more possible in a place like
oh my
Georgia.
gosh.
So we'll keep playing this out, but the goal was to have relationship manager investments on a relentless pace to keep adding, our team that's dedicated towards handling client relationships, and then frankly making more efficient by the use of machine learning, now AI, to make them more and more efficient, and also where to call, who to call on the prospect list we have. And we're seeing that take hold, and that's where you're seeing these logos just build up in new client acquisition.
Okay, thank you. And that was my second question on the small business side. Can you help us understand what you're seeing today from small business?
Sandra, you're not late. Join us on Extra in a minute for the replay and the live chat. You catch up with everything. Don't worry.
The past several years in small business, way ahead of peers. And
yes, I saw Rocket Labs. I'm trying to get to it. Henrik,
in our world,
I know it's one of yours.
How are they thinking about investing in this environment with tariff overhang?
I'm glad you bought Bank of America. One of my best ever tips.
They're just trying to figure it out, and so they see the policies.
That's got to be one of the best I've ever done.
Deregulations, the
dividend
policies,
as well.
Immigration policies, etc.
Everyone's bought Bank of America on the Lucasades. I love it.
And so they're trying to figure out how it affects.
Congratulations, all.
Today they're producing the goods, and the goods are going out.
Top sector now.
Sold, but they're trying to figure out how that relates to it. And there's the concerns I think that were interesting is for a while it was inflation, obviously coming through last year when that was a discussion. Then it interestingly flipped to labor again, which was a little bit unique in that they're trying to make sure they get the qualified employees they need to operate. But if you look about it, they're basically sanguine on the current environment, but they're worried about how this will affect their businesses and where they should invest. And I think that's slowing down, some of their decision path right now because they're trying to figure out if my goods and services I be able to pass through the price. Do I need to change my business plans in terms of growth? Should I buy that piece of equipment? That's why line usage has been relatively muted still, and we continue to.
We could hit 77,000 subscribers today. Everyone tap subscribe. This is really exciting. We were only 75 2 days ago. This is brilliant. Love it.
Which is like in healthcare. We have a big business lending to docs and veterinarians and other people involved in practice, and those things tend to have less impact by the issues at the moment because of services business and things like that. So I think it depends on the business, depends on location, depends on whether in services or whether in goods. But right now, if they look at the last quarter, just like we're going to look at, looks pretty strong, then they're going to sit there and say, read the papers and see all the things coming at them and saying, should I slow down my decisioning? That,
NVIDIA top buy.
Because once they talk themselves into slowing down, it'll be a while till they get restarted. Right now, I think it's more thoughts and worries, and they've got to see this settle in. And when it settles in, then they know how to run their business. But right now, it's very unsettling for them.
Thank you.
We'll move next to Ken Usdin with Autonomous Research. Your line is open.
Healthy bit of trading, been sold for profit and bought back. I love it. That's good. That's really good.
Repricing bucket, can you help us?
It's going to be a really green day today.
How much is rolling off each quarter in the HTM securities and mortgage loan books, and what you're getting from that? And then also, as we get closer to that second half benefit on the cash flow hedges, what type of pickups are you imagining in terms of like new fixed rate versus received rate versus what's rolling off? Thank you.
So, Ken, on hold to maturity, if you look back over the last 14 quarters, it's sort of been around $8-9 billion a quarter. It depends a little on the seasonality as we go through the year. So $8 billion.
Bank of America, I wouldn't chase it now, Sandra John. It's too late. We gave you this a week ago. I've been telling you about Bank of America and the financial sector now for months. It's going to be the top sector of the S&P along with energy. It is. We talked about the XRP connection. It's too late now. I mean, you can buy it and it'll probably go up, but you want good profits. You don't buy to make 0.5%, 1%, 2%. You buy to make 20, 30%, right? And then you hold forever on a bank stock. That time has come and gone now, I'm afraid.
As being something where we're probably picking up.
You can own it through the S&P though, which is what I do. That's still good value.
So it just depends on any given quarter.
I mean, that's what I've done.
A little more guidance as we get closer.
Okay, great. And then second question, you guys did another great job getting deposit costs down 20 basis points for the second straight quarter. As you contemplate this
You're welcome,
growth
poor
that
man,
you're
rich
seeing
man.
and continuing, how do you think about, just how much you can continue to reduce rates paid relative to, how you're seeing just the overall cost of funding? Thanks.
Yes, I don't think we'll have any change in our philosophy there. We felt like when it comes to the wealth clients,
it's going up with it.
Where they
promise delivered, pump promised, pump delivered.
And then as it relates
not a crypto channel, a proper investment channel that does Bank of America earnings. This is what you need, not your crypto bros with the baseball caps. You need to know the real facts. And there it is.
It's trickier, obviously, in consumer.
And you're listening to it. Oochie, oochie, up we go, up we go, up we go. Come on.
And we still have some preferred. We were able to take that down last quarter and look.
It should be illegal to make money this easy. Probably is.
Thanks, Alistair.
And we'll take our last question.
Last question.
From
Here
Gerard
we go.
Cassidy with RBC. Your line is open.
Hi, Brian. Hi, Alistair.
Hi there.
You guys did a very good job in giving us the details about.
I did a better job. I told you what the bank were going to do before they did.
Versus today.
Way before.
Slide 22. And if we move up to slide 21, you can see the consumer loan portfolio has obviously been de-risked, as you pointed out. What I'd like to ask a question about is the commercial loan portfolio, particularly the growth.
You got to have fun with it.
Can you share with us some of the confidence you have that we're not going to see some issues here? Particularly you look at the dark blue non-U.S. commercial has grown very, very strongly over this
Morning,
time
Karen.
period. And what can you share with us about the risk in this portfolio relative to maybe 2009?
Yeah, so I'll start, Gerard. I'd say we felt like over time as we've become a more global and international company than maybe we were in 2007, it was important for us to diversify the loan book outside of just the U.S. And it was appropriate
You're welcome.
to support clients who are
Alex.
multinationals in the United States operating around the world.
Thank you for everything.
And
we do it all together, mate.
Around the world who also operate operate and sell into the United States and other places. So that's natural, I think. We've kind of supported that over time. And that's been a big part of our growth over a 15-year period. Now, in terms of commercial, if you look at the loan growth overall, I'd say, we're pretty diversified in the way we look at that. So all lines of business grew last quarter. So that's small business banking, it's business banking.
Stand by for technical chart, a vote of the poll, predictions, where we go next, big news on stuff I haven't told you about yet.
And it's wealth in terms of their commercial exposure. So
Love it.
A little bit of it is diversification in all lines of business. And then if you looked at the book itself, for the most part, as we talked about, it's secured, it's investment grade. We always think about good client selection. It's the sort of people who can make it through any environment. That's where we're investing and partnering. And we've had virtually no charge-offs. So then when you turn to like the global markets business, that again, very diversified, all assets, all client types across things like asset backs and mortgage warehouse and credit financing and subscription. So we feel like this book is in very good shape. We feel like they're the right clients. And then, for our
How did he know? How did he know Bank of America and XRP would go up together? How did he know?
Sure we're seeing benefit not just in the loan portfolio, but in the other things we
speak to people who work there. That's how I know.
Very good. Very insightful. Thank you. And then as a follow-up, Alistair, you guys mentioned that the credit card charge-off ratio was a seasonally higher number at just over 4%. And when we go back to the first quarter of 24 and 23, obviously the charge-off levels were lower. Can you, and especially with the unemployment rate remaining as low as it has over the last couple of years, is the higher level due to some of that FICO score inflation we've read about during the pandemic? What do you guys account for the number being where it is today versus the last couple of first quarters of each of those prior years, considering that the unemployment rate, for example, has not gone up that much?
Yeah, I think I'd flip it around the other way, Gerard. With all the stimulus and all the after the pandemic,
let's get 77,000. That's 2,000 in 2 days. Click subscribe. Come on. Let's get to 77,000. That would be great. 2 days, 2,000 subscribers.
And all you've seen now is it sort of normalized around where it was in a very good credit period for our company, in the 2019 pre-pandemic type of era. So, that's just normalization. I wouldn't overread that. It's a comparative period. So if you look, relative to 2019, 2018, you'd see that those charge-off rates running 3.5-ish, plus or minus percent, are similar to what we have now. So we feel good about it. The important thing is, if you look at stressing that portfolio like we do, you could see that the losses that are projected, whether it's in the CCAR process or own internal stress test, if you take it across 9 quarters, it doesn't come it's closer to, honestly, the charge-off rate we actually underwrote to prior to the financial crisis. We underwrote to like a 5.5% charge-off rate in normal times, and then it would go up from there. And so it's a much more core book driven at a very strong performance through crisis. So I think it's just normalizing more to where it was in the relatively good credit times in 2019, rather than any significant movement. And in fact, we said that as we came through last year over and over again, people kept doubting it. What you've seen is delinquency actually have fallen, and it's flattened out in terms of the $1 billion charge-off level in cards.
Got it. Thank you, Brian.
Okay, well, thank you. I think that's all our questions. I just wanted to think about the two or three things. One, thanks to the team for another good quarter. Thank you, and thank you all for participating in our call. Number two, as I said earlier, the story of the first quarter is a strong operating performance, good organic client activity, growth in revenue and earnings, manage expenses well, and at a period of time we continue to make investments to position the company for the future. On the other hand, we gave you the latter part of this presentation to show you our multifarious loan book and how that diversity of types of clients and collateral types and geographies and all that holds us in good stead as not only by our own internal models, but also by the comparison of stress tests. In addition, we talked about how we're well reserved heading into whatever may be in front of us. So our job is to serve our clients in all times, and that's what we plan to do. Thank you.
There we go. Bank of America earnings now got lots to do, lots to talk about. So first of all, I've got a technical chart here done by Sensei to trade XRP. I promised you today that would get a pump on Bank of America. I've been following it for a while. I've been talking to people who work there. I said the correlation between XRP. We saw that go up with it. Fantastic. We didn't get a mention though. We didn't get a mention. It's not going to be in the call. It's going to be in the Q&A at the end. Still no mention of XRP. Now, the reason why we covered the earnings and why it's so important, because the broader market go up, the banks go up, which, as I said, was the biggest sector of the S&P alongside energy. The broader market goes up, XRP goes up, crypto goes up. It's great. All of that is great. And we know that there's a connection between Bank of America and XRP. Sadly, there are YouTubers. I'm not a YouTuber. I simply broadcast on YouTube TV. They're always trying to sell stories and get bits of information and make 2 and 2 because it sounds great. They don't cover the earnings like this. We can't just make up stories and say Bank of America is linked with XRP. I said it because I actually have that evidence. They don't. They're just making it up, all right? And then today it's going to go to $20 and $50 and $1,000 and all the rest of it. So I've got some big news today coming up. Really great. Why the markets are up, why they're going to keep going up now. We've got another boom about to occur. All of that's coming up in the next show. Now, before I send you to the extra channel, which is where I'm going to send you, number one, let me end the poll first of all. Are you here for Bank of America or XRP? End the poll. 1,344 votes. You said you were here for XRP. It's a Bank of America earnings, and 91% of you are here. The result is in the chat. It's absolutely incredible. The support for XRP is through the flipping roof. Incredible, but great to bring it to a broader market. That's what we want to do. Be seasoned investors. All right. Now then, I also put out a very important poll. Now, this poll is better than the poll in our show because it actually ranks on Google. All right. Now, I asked you, are you bullish on XRP? 607 votes we've had so far, 1,000, and you'll start seeing it rank all over Google, which is great because I'm putting out, are you bullish on XRP, which will be on Google and YouTube. So you want to vote on this. Let me give you the link right now. I came for both, to be honest, Martin. Yeah, you like a bit of... You should be in Bank of America. Bank of America was what I was suggesting everyone buy anyway to be in it. I mean, I'm in it through the S&P. Look, are you bullish on XRP? I'm going to refresh this screen in 1 minute. I'm going to give everyone a quick chance to vote. It's on our community page of the channel. You ready? Okay. 79% say yes. I mean, that's a great result. Let's refresh it in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. 607 votes. Now it's up to 608. I gave you 10 seconds, all right? But 79% bullish, great. You might want to vote on that throughout the day. I strongly recommend you do if you want a bullish sentiment ranking on Google, you might as well. Now, in a few moments, I've got here after this event, we're going to go to extra. The link is in the top. I'll give it you again. We're not going to go there yet. I've got a chart for you on XRP. So stand by. Here is the link where we're going to go in a minute. All right. So once we go to extra, I can end this stream and then I can upload the Bank of America XRP earnings, and I want to do that. And then I'm going to go live with the big news today. And boy, have I got some big news today. Join me on the opening bell. Now, you got to make sure that you do this. Not everyone understands this. You don't get notified about all the different things that are happening. So When you click subscribe, make sure that you've tapped the bell. Now, if you get too many notifications, I only send you 3 a day. That's all YouTube allow me to do. But if you get too many YouTube notifications, you can turn other channels off, you can personalize them, whatever. But you really want mine set to all. Make sure that the bell is set to all. Okay. Now, if you still don't get notified and you still miss things, there are lots of other ways that you can get notified. First of all, I post everything before it happens on my Blue Sky account. I'm on Blue Sky and X, so I cover all political angles. Here is Blue Sky. If you're not subscribed, follow me on Blue Sky, you need to. I post the events before they go out so you don't miss it. And that way I know what Democrat voters are saying. And then I go over to X where I know what Republican voters are saying. Here is my X account. If you've not yet followed me over there, there is the link. There is my Instagram. Now, if you want to be a member of our channel, the memberships are getting better and we're adding a lot more. They're frozen. The price is frozen. It will never go up in price, including inflation. So you might want to jump on my membership. There is the membership. If you are on an iOS device, iPad or iPhone, you need to select a browser. So you can do it if you are on an iOS device, and then the desktop version. If you want free stock in Robinhood USA, there's Robinhood USA. I get free stock, you get free stock. If you're watching in the UK, and we know many of our audience are, about 20%, there's Robinhood UK in the chat. You get free stock, I get free stock. Now then, Discord is changing and upgrading big time. We're now going to be providing training for free, okay? And Sensei is making me some technical chart analysis videos for training exclusively to Discord. Exclusively to Discord. What we've got now is the only way you can access Discord is Discord Premium. Okay, we've been providing it. We've been providing a free plan, and it will always exist for all our members who already joined. But anyone who joins now is not going to be able to get the free plan because we've got so many people joined. It's getting too big, and I want to be able to make sure that I can answer every single question, and Sensei can answer every question. Ed Nevius provides scalp trading. He's paid to learn thousands of dollars to learn to scalp trade. He provides it in there as well. So we're going exclusive. Now, if you are a free member, as long as you are a YouTube member, you will keep your membership. The moment you cancel your YouTube membership, the moment you leave Discord, that'll be it. You won't be able to get back in again. Stay in as a YouTube member. Okay, very, very important. But if you want to join Discord now, I do not accept any friend requests or anyone in that is not a Discord premium member. It's only a couple of bucks, but you get extra service if you are premium anyway, because you get the videos, you get the priority. I answer all your questions. If you tag me, Martyn Lucas, MartynLucas, beware the scammers that will friend request you. I never friend request you. I will never message you. I only reply to you. And I reply to all of my premium members just like I do on YouTube. And I'll also accept a friend request from you as well. So direct communication, direct answers, private answers as well. But that's all now exclusive for Discord Premium. It's only a couple of bucks, but I only do that now for premium. There's no more free ones. That's it. It's finished, and so on and so forth. Okay, there is that. Now, if you want Seeking Alpha or Alpha Spread for our software, our pro software, how I've got this information this morning, which I'm going to bring in the live show in a minute, there is the link in the chat. Now then, I've got a chart here. Before we go over to Extra, so I can end this stream, and before I can come back with the big news on the markets today, I'm going to... XRP is now sold off after the Bank of America event. There we go. Some of you used it as a selling opportunity. I think that was a big mistake. It's a tiny, tiny profit. Why would you scalp that? That's crazy, but that's what people do. The Bank of America went up. It was a great result. We knew it was going to be a great result, and people have taken profit. The difference in Bank of America, it will go straight back up again. The result was too good. XRP, great shame that people scalped it, but that's okay. I mean, scalp it if you make decent profit, but when you're making just a couple of percent, you're missing your right to something better, and then you're paying tax on it. There's no point doing that, but there you go. But for those of you that actually want to trade it wisely, not take a few cents off the table, it's like I've always said before, be a king at the table. That's where I sit. I sit and I'm going for hundreds of percent gains. I'm going for $1 million portfolio. Don't be those scratching under the table trying to scratch a profit. That's really a bad way to make money. Anyway, I'm going to bring this to you now. This is how to trade and the big news for XRP. All right, Sensei's just recorded this. I'm going to play this for you now. You want to hear this, and then after this, we'll go to extra, and then we'll go to the big news coming today. I think it's a great shame you've just scalped that. You've done it at the wrong time. You've taken profits way too early, way too quick, and now you're going to pay tax on it. Very, very silly. Here's Sensei's technical chart. This is the right time to buy. This is the right time to sell. And the big news that you've all missed. Okay, stand by. Here we go.
Breaking news on Martyn Lucas Investors channel. We are looking at XRP Ripple acquisition, XRP price predictions,
tap the like button,
strategy,
consider subscribing.
And my strategy going into
we'll go
all
to
of
the main show in a minute.
Going on in the market. So thank you for tuning in. We are going to be covering all those facts within this video. So do stay tuned until the end for a special discount code for some XRP merch. That will come later. Make sure you watch to the end. Okay, so what we've got going on is a big deal. This has happened last week. We covered it there and then, but
I'm just going to pause this and say, Sensei, Stacey, this is the problem, though. This is the problem with crypto and XRP. It struggles to do well because people are always fearful. They're always fearful. Stacey said this. I think some of the people selling off may just want out due to the massive manipulation lately, and it is fearful selling. I do not blame them. I blame them. I'm the opposite. You should not buy an asset that you have fear on. If you have fear, you don't know what you own. You shouldn't have bought it in the first place. You're not helping the XRP community. You're not helping yourself. You're paying tax on gains, and there's no point. You better just own the S&P if you can't stomach the the turmoil and the volatility. That's the very definition of not knowing what you own. So there it is. Just fear. Fear does not belong in anything. If you've got fear, you don't know what you own, you shouldn't own it, you shouldn't buy it, and you're missing out your right to make real profits. Real profits like this. This is what I'm talking about. Look at that. I have made a bigger profit today on S&P than those that have just traded XRP. Absolutely bonkers and crazy. Anyway, we're going to go back to this very important chart. Here we go from Sensei. This is when you trade it. This is how you buy it. This is how you sell it.
Time to digest it. It is still very relevant. It is still the biggest news we've got from Ripple ever. And this is potentially the biggest news we've ever got for XRP.
Yeah,
this
huge.
Is very important news that it is still bullish a week from now. It will be bullish a year from now. So let's digest it a little further. How did this start? This started with a tweet from Brad Garlinghouse. This started with the tweet that's saying Ripple has acquired has created an acquisition
going up again.
Of Hidden Road.
Now you're chasing
for $1.25 billion. In the time where every single company is not making big decisions, companies aren't IPOing, companies don't have so much uncertainty. Ripple is thriving. Ripple is acquiring businesses for $1.25 billion. This is a cryptocurrency company that deals with XRP. This is one of the biggest moves in the crypto space ever. And here we go, one of the largest deals ever in the crypto space. But the price tag isn't what's most important. It's that this deal marks a once-in-a-lifetime opportunity for crypto to access large and the most trusted traditional markets and vice versa. I'll be telling you exactly where I think XRP is going. I've got some price predictions that I think are realistic, but I also think will excite a lot of people, so do stay tuned. This is a prime broker alongside other key functionalities historically managed by banks for the most part, like Hidden Row, have proven themselves as the trusted intermediary for large hedge funds, market makers, OTC desks, quant traders, and more. Ripple has been a customer of Hidden Row for years, and we know their breadth of expertise firsthand, clearing $3 trillion annually for 300 of the top financial institutions globally. This is massive. This is great. Ripple have been customers. They've been using Ripple. Ripple knows their business.
That's it.
They've made a good offer. They've accepted the offer, and now they own this broker. this place uses different ways to send money to different companies. It uses it as a brokerage, and now they can use the XRP ledger. They can use RLUSD.
I want to explain this. Stacey said, maybe they only had 50 to put on XRP, not 500 to put on the S&P. So I get both sides. No, I disagree, Stacey. You could buy $50 worth of the S&P 500 as well. If you don't know what you own, don't buy it. Own the business, hold the business. You've got no business buying something you don't know. You just give yourself stress. You don't help yourself. You'll end up losing. You'll end up paying tax on losses. It's absolutely, and then you're chasing. This is a statement that people say all the time. It's incorrect. Stacey said, but maybe they only had 50 to put on, not 500. No, it's not how much money you put in, it's the percentage. And you can put 50 on the S&P using fractional sharing. So it's exactly the same as buying $50 worth of XRP. So I get both sides. There's not both sides. There's not both sides. The sides you're talking about is lack of knowledge. They don't understand what they own, and they don't understand about fractional sharing. So there's no both sides at all. I just want to make sure. Well, some of us, not everyone. Stacey's holding her position, but I appreciate you trying to be nice to people, but being nice to people doesn't help them. We've got to tell the truth here, and that doesn't help anyone.
Charrington91 donated $5 through a super chat. If you know what you hold, there's no need to sell.
Exactly.
Complete amateurs. I also blame them. They need to harden up and cut out the emotion.
Exactly. This channel isn't, I'm not trying to make friends. I hope I make friends. I love people and I'm here to help people, but I don't think I help anyone by just being nice and telling everybody what they want to hear. That's not the case. The fact of the matter is you're missing out. That at the end of the day, look, see now it's going back up again. These very same people are going to be chasing it going, oh, it's going to go up to $10. Yeah, it is. And you're going to buy it at $5 when you add it at 38 cents, which is where I bought it. At the end of the day, you only buy something if you're buying under value, you know what the value is, and that's the problem with crypto. People don't know what the value is, they just guess, and that is the problem. They don't know what they own. They sell it for a small profit, then they're chasing it back up, then they can't pay the tax man, and that is what I'm talking about. You just own it. You don't sell it when it's under your value target. You know why you bought it. I bought the S&P to make $1 million. It will make me $1 million. I won't pay any tax on it. I won't lose on it. I will win 100%. My dividends are now 60% of my margin interest. Think of that. I've got $330,000 the S&P. I'm all in on margin, and my margin is paid for by my dividend interest on the S&P. It's not even a dividend paying stock. It does pay a dividend, obviously, but you don't buy it for the dividend. It's covering my margin. That is value. That is how to invest. You're missing your right. You're scrambling under the table. Listen to what Sensei is telling you. He's telling you when to trade, how to trade, what levels. And if you still don't understand it, don't buy it, because you'll just keep losing over and over and over again. Let's listen to the great man Sensei as he tells you how to trade this stuff. Really important.
They can use XRP. They clear $3 trillion annually. That is massive. That could be added to the XRP's market cap, for example, if that was all part of it. So that is a lot of money. And remember, the special thing about XRP
Lionel
is
agrees.
The market cap isn't how much people are investing, it's how much is in XRP. And if they're moving trillions of dollars, that is part of the market cap, and that will push the price up. And $3 trillion is larger than I think the whole market cap of the cryptocurrency space right now. I'm not saying that's all going to come onto the ledger, but a proportion of that will. And this is one of their first acquisitions, or at this scale. This is the capital and activity that will tap into XRP and XRP's ledger, bread and butter, instant, efficient, scalable, and low-cost movement of value. Instead of waiting over 24 hours to settle trades through fiat rails, Hidden Row will be using...
That's right, Stacey. They make mistakes. And our job is, if I give myself a job, is to help people learn from those mistakes. All I'm saying is some people do not know that. They make mistakes. We make mistakes and we learn. This is what I'm saying. Absolutely right. You are absolutely right. We can agree to disagree. Well, there's nothing to disagree on. There's nothing to disagree on. There's no two sides to it. There's no two sides to it. Not knowing about fractional sharing, not knowing about the value of your asset isn't two-sided. It's a simple fact. So the point is, Stacey, and I love you for it, you're telling everybody what their mistakes are, but you're being nice about it. And that doesn't help anyone, right? I'm also trying to be nice and understand what you're saying, but there is no two sides. There's no agree to disagree. It's just facts, and they're getting it wrong. And my job is to help people learn. And they don't learn by saying, you didn't have 500. No, you did have 50. You could have bought fractional shares, and you shouldn't have traded when you don't understand it. You've just had great news and you don't know what you're doing. You're only trading on emotion. That is what I need to say, because that is going to help people. Being nice and stuff don't help no one. And that's why people lose money all the time, and I don't. 23 trades, 23 wins, going to $1 million. That's what people follow me for. That's what we're going to say, and there is it. So we're not going to agree to disagree. There's no two sides to it. It is what it is.
XRPL for clearing a portion of their trades, and most consequentially using RLUSD as collateral across its prime brokerage services, including cross-asset, crypto, and traditional instrument trades. That is massive. RLUSD being used as collateral, XRP being used to do what it was made. Remember, Bitcoin was made for cross-border payments. That's not what anyone thinks of Bitcoin. XRP is made for cross-border payments, and it's doing cross-border payments. So that's incredible. With this deal and the backing of Ripple's significant balance sheet, Ripple's balance sheet is incredible. Hidden Road will be exponentially expanded, and its capacity to service its
We'll open the phone line up. You can call in.
The largest non-bank prime broker globally.
Here's the phone line.
Ripple and Hidden Road combined are generational leap forward, ready to truly bring worlds of traditional and decentralized finance together. There's the link to call in. That's key,
let me know you're calling in first.
And this is the start of that. We're looking at the XRP price, currently sat at $2.10. We've been trading XRP. We've been holding it for the long term. We've been covering XRP I've been holding it for 7 years. I've been covering it for 3 years on the channel. And we've been buying at 30 cents. Trading this, I've come on the show and I've told you exactly what I'm selling. I sold at the all-time highs, 10% of my position to buy back lower. We've historically been buying at $2 many times, making 40% moves within days. Every time it hits $2, it had significant bounces. Last week I came on the show and I gave you my most up-to-date feelings about it. Last Sunday I said $2 being hit again. You're knocking at that door, it's probably going to fall further, and I gave you my two next levels I'm going to buy it, $1.80, $1.71, and those exact levels came into fruition. I bought at those levels. I'm already up 22%. So I'm very happy with that. We're back above $2. So we've got $2 as support once again, which allows traders to get back in at $2. It allows another base at $2, so it won't fall as far as it could. So that is all good news. We're bullish again. We're back above $2. Everyone said that XRP is going to collapse once it goes down $2. Well, it corrected to the exact levels I was prepared for. So I'm very happy with that. And that's why I'm going to be holding for my XRP, and I've still got my price predictions of $10 to $12 by the end of the year. And that is, of course, if the wider markets don't go into recession, if the S&P 500 continues moving up. Remember what I've been saying in times of volatility. What do? Well, you look at the three options. The market's going to go up, the market's going to go sideways, the market's going to go down. Three options. That's the only three things that can occur. So going into your position when you're making your buy,
exactly, Lionel,
you need to be prepared for. You have to have a plan for each of those scenarios. And I've had my plan. I've shared my plan, and I'll share it again during this video. If I'm buying, my average position's around 50 cents. I bought a lot at 30 cents. And I had a take profit strategy. That's why I was selling a few shares at all-time highs, the 1618, and I did that live on the show. You can go back and watch the videos. I do also have a higher price targets: $4.70, $5.30, $6, $7. All of these are Fibonacci levels. I'll be dollar cost averaging out my position. So I've got my strategy for the upside, and I'm sticking to it. towards the upside. Those levels, I'll be selling more. These levels,
you are very nice, Stacey. You're absolutely right.
So that's my strategy for the upside. I've got a clear strategy. I know why I'm selling. I know my time frames, 1 year/4 years. I don't care about the time scales. If it goes up in the short term, I'll sell more. If it takes longer to go up, I'll sell less, because XRP will be used more within the future, so its value will be higher. Right now, its value isn't $50 today. So if it went to $50 today, I'll sell it all in 4 to 5 years' time, or in 10, 15 years' time. Its value might be at $50, so I won't be selling all my positions. So it depends on that as well. So that's my situation if it goes up. If it goes sideways, I'll just continue with my monthly buying, DCAing into XRP. If it goes down, I'm prepared for a 50% crash. I'm prepared for a bear market of 80% corrections. I'll buy at $1.25. I'll buy at $1. I'll buy at $64 for 64
That's
cents.
right.
I'll buy at 50 cents if it goes all the way that low. I don't think it will go as low as 50 cents. It might go down to $1 in a recession. I'll buy if it goes down. That's my strategy. My risk is high. I don't mind taking high risks. And I'll be buying at those lower levels. If it goes sideways, I'll dollar cost average. So I'm prepared for an 80% crash. I'm prepared for this to go sideways for 3 years. I'm prepared for this to shoot up this year. I'm prepared for this to go up in 4 years' time. So I'm covered. I'm happy. I've got my strategy in place. Big banks, Standard Chartered is also expecting big gains. This is incredible that big banks are now coming out and giving price prediction on XRP. XRP is being noticed by the big banks. Standard Chartered sees XRP soaring to 500%, flipping Ethereum as the second largest crypto.
There you go. He's talking about the banks, and I totally agree. And I think XRP investors, or gamblers, I would say, have just shot themselves in the foot now. We had a great day. We've got some good news coming later on in the main show. Huge news for the markets. The overall market going up. Bank of America just done really well. I told you there's a connection there. And people just took a few cents profit to drive it all the way back down again. This is why I will not buy XRP, right? I would buy Ripple. I can't buy an individual stock because I'm media and I want to provide the best information and not pump and dump assets. I want to provide you the real news. But it's such a shame that we bring you the news that tells you it's going up and people make a few cents profit. So, there are so many people who say they like XRP, but they don't. They don't know what they own. They couldn't care less. They've no idea where it's going. It gives them a few cents and they go, oh, I'm selling it now. It's like, what was the point? What was the point of even getting up in the morning for a few cents? Absolutely bloody pointless. You're missing the whole point. It's a $10 asset and it's ridiculous. Let me explain it like this. I'm going to make this really bloody simple, folks, all right? I don't care whether you like it or not. I don't care if it's not nice and cuddly and cozy, but here's the reality, right? Every shop in America will sell you a can of Coke for $1. That is the going price. You know what a can of Coke does for you. You know how it refreshes you or not, whether you like it or not. You know it's worth $1. Everybody sells it for $1. Okay, everyone sells it for $1, and you know that you use it all the time and you drink it all the time and so on and so forth. But today, you find out that they are going to limit the supply of Coca-Cola. There's no more Coca-Cola being made next week. That's it. It's all over. So we predict that Coca-Cola is going to $10. All right. Well, what do? If it's on sale today at 50 cents, what do? You fill the fridge with it. You fill the cupboards. You fill the garage with it. You buy as much Coke as you can because you know it's undervalued. That's the point. No one knows what the value of this is. They don't understand it. All right? So you know it's undervalued and you know it's going up because we know it's going to go to $10 and you can sell it for more later because in the Coca-Cola example, there's no more Coke being produced. So it's bound to be, the demand is going to be high for it because it's going to sell out and there's going to be none available. That's basically what it is. That's what real investors do. You can't say I love XRP and I'm an investor. If the moment it goes up a couple of cents, you sell it, you miss your point. And also, what you do is you bring a volatility in and an unstable asset. This shouldn't be like this. I know crypto is volatile, but it doesn't need to be like this at this price. It deserves to be better. And it's not better because the people that own it aren't investors. They're gamblers and scavengers and scratching around in the dirt. And remember, this is really important. There's no one who can buy XRP tax-free. So you just line yourself up for a 20% tax bill. Simple as that, right? Now, the trouble is, you've got to buy it back now, and this is what people don't do, and this is what Sensei's trying to explain. You've got to buy it back at the right price to compensate the tax you're going to pay. You might go, oh, the taxman doesn't know about me. Yeah, he does. Your brokerage tells the IRS, tells it Inland Revenue, and at some point, a knock on your door is going to go, you've been selling all this XRP for profit. Where's my tax? Well, I haven't got it because I bought it back down and it's gone back down again because I chased it and now I'm out of the money. Well, we don't care. Sell your XRP for a loss because you owe us tax. This is the problem that people don't do. They don't understand the value of what they own, so they scratch a little profit. So why I wouldn't touch it? I represent XRP for my army, for my Lucasades, because it's the best crypto out there. And I'm supporting it, and I'm getting up in the morning covering Bank of America earnings, showing you it's going to go up on the earnings, it does, and then you all scratch around and take money off the table. Absolutely ridiculous. Absolutely ridiculous. Listen to what Sensei's telling you. He's telling you how he successfully trades and wins all the time. Listen to this. It's important. Otherwise, you just keep losing and then go, why did I buy it when it went up and back down again? Why did I buy it when, oh my God, how many times? Here we go.
That's their price prediction. They're saying $12.50. That aligns with my theory as well. They're saying by the end of the Trump administration, I'm saying this is altcoin season, should be this year. Historically, looking at cycles, this year should be the year we see a $10 XRP.
Yeah.
Standard
So why
Trust
would you
has
sell it for
officially initiated
$2.20?
coverage on XRP, forecasting a mega rally for the crypto asset, driven by its role in global payments and
Stupid.
tokenization. Tokenization is massive, and XRP is
Stupid.
at the forefront of that. In a Tuesday report, Jeffrey Kendrick, the bank's global head of digital asset research, projected that XRP could surge around 500% to reach $12.50 by the end of 2028 as part of this new coverage. Kendrick also anticipates that XRP market capitalization will surpass that of Ethereum's within the same time frame, he said. He stated, by the end of 2028, we'll see XRP's market cap overtaking Ethereum, so that'll make XRP the largest non-stablecoin digital asset at the time, and I am in full agreement. I think XRP deserves the number 2 spot. Well, I think it deserves the number 1 spot, but Bitcoin has created its new role. I think XRP should be number 2, and I think it will get there in the next 5 years, and I think it will make $10, and I think it will go to $50, and I do
Everyone
think it
sold
does
their
have a path
XRP.
to $100 as well. So I am very bullish on XRP, and I'll be happy for it to go down so I can buy more. Here's some key facts about the
And there's an important point, right? This is an important point. We were up to what, 220? I forget where we were now. Doesn't matter. We were up. We were doing well. Got a great day. Could have gone up and up and up today. Could have got to $2.50, $3 today if everyone hadn't started selling. And then people start taking a bit of profit. And then everyone who says, well, I really like it, they started selling it. Why are you selling it when it was down? So now you've just lost money because we were up a minute ago. Everyone didn't sell it up here and then buy it back here. Everyone started, it's just laddering down, going down. I'm selling. So now everyone's selling for losses. Absolutely ridiculous. And sometimes I wonder why I even bother. This is crazy.
Acquisition. Ripple is acquiring Hidden Road. We know that for $1.25 billion. They processed $3 trillion for 300 top institutional clients. It's going to be integrating the XRP ledger. Hidden Road plans to migrate its post-trade activities to the XRP ledger, enhancing efficiency and reducing costs. Exactly what the cryptocurrency was made for. This is one of the only cryptocurrencies out there which is doing what it was designed to do, and it's actually doing it at a large scale. What's ROUSD going to do?
And everyone has sold their XRP
across Hidden Road's prime brokerage.
Bank of America just blew off the top.
Efficient cross-margining between digital and traditional markets. The enhanced demand for XRP. With institutional clients settling trades on the XRPL, demand for XRP is expected to rise, potentially driving up its price. If the demand increases, the price will go up. Strengthening RLUSD's position by serving as collateral in prime brokerage services, RLUSD's utility and adoption in institutional finances are likely to grow. Remember, this is what we've been saying XRP is going to do, and now it's doing it at a massive scale, and now it's got RLUSD to deal with the collateral side of things.
Yeah, the trouble is, Sensei, everyone's selling it.
Bridging traditional and decentralized finance. The integration facilitates a seamless connection between traditional financial markets and decentralized finance, positioning Ripple at the forefront of this convergence. Let's see what it can do for the price of XRP. there's a surge in market confidence. Institutional investors will be seeing what's going on. Ripple's making massive moves. $1.25 billion isn't a light move. $3 trillion moved annually isn't a small amount. Institutions are looking at this. Banks are making price predictions on this. They're covering XRP's price. This is going to be a surge in market confidence. They're going to see this as a strong bullish signal. 1.25 billion acquisition as a show of strength and a long-term commitment to institutional adoption. XRP often reacts positively to major announcements, especially those involving traditional integration. It did react positively. Increased utility,
Syrian,
uptick in volume and trading
congratulations, you obviously know what you own.
Upwards pressure on XRP's price. Increased visibility and media coverage. Remember, the cryptocurrency market, it gets swung within these bull cycles with a lot of media coverage. That's what helps the price move up, and this is going to attract a lot of news coverage. If the markets are risk off, a Bitcoin is falling, XRP's rally could be muted in good news. Remember, we've seen this with the SEC case. They won the SEC case, and I'm talking
such a
year
good
or
day,
two ago now,
and you've all sold out. Crazy.
When the judge made it the law of the land that XRP is not a security, the price surged 100%. The next day, it fell back down again. Not because the news wasn't good, it was because the wider markets were in a bear market, and it wasn't the best time for the news to come out. We're sort of in the same situation now. If we were at all-time highs, the markets are still moving up, then this news would have made XRP surge to $6, for example. This news is still good long-term. There can still be better news stories coming out, but if the wider markets are falling, the gains will be muted until the longer term, where they will actually be in effect.
There it is.
Okay, so that is the coverage
Syrian.
on that. So again, if you've enjoyed the video, please do hit the like button, subscribe. We'll be covering all the news. Remember, the XRP ETF still hasn't come out. The spot ETF. We've got a leverage ETF now, but the spot ETF hasn't come out yet.
Thank you, Sensei, for that
There is
great
so much more good
information.
news out there for XRP. I'll be showing you my strategies. I'll be telling you exactly what I'm doing, and we'll be covering it live together every single time there's a major event on XRP. So please do subscribe, hit the like button, and until next time, take care of yourself and each other. There will be, sorry, I messed up the ending, but there will be videos up here and here. And I did forget to tell you that there is an XRP. We do have our merch. So
I'll put the link in the chat now.
For the people that listened at the beginning of the video,
MartynLucasShop.com.
I'm going to give you a discount code.
Look at this.
The discount code is 25 off. 25 off. That will give you 25% off anything on the XRP page. So you'll get 25% off your phone cases, your mugs, your jumpers, your t-shirts, 25 off, and that will go live as soon as this video is coming out. So you can do that. There is also, if you click on the 11-ounce mug, there is a 40% discount right now when you're buying the XRP 11-ounce mug. It will add the buying the dip mug, you'll have the Lucasade mug, and you'll get them as a 40% discount for £38. There is only a limited supply of each of these mugs. Right now, there is 10 of each of these mugs available. So there you go. There's a 25% discount if you only want one. If you want 3 mugs, the 40% discount is live right now. When you click on it, you can add it as a bundle. And also, if you spend 100, you get another 20% off. I'll let you look at all the discounts. Until next time, here's a link to the merch.
He's giving
Here's
everything
the next
away
video
again.
You should watch. Take care of yourselves and each other.
Thank you, Sensei. Great video there. That was one of the best. I love it. So loads of information there. Let me just shut that down a second. Really good. Now, listen, folks. You've just missed your opportunity now. We've got, exactly like I said, what did I say at the beginning of the show? A major green day. There it is. Bank of America blew off the top. Now you got to chase back XRP. You don't know how to get back in again. You've made a big mistake there. So it's the right thing for me to say to people what to do. I'm not here to be nice. I want to be nice. I want to be respectful. I am respectful, but I'm trying to help people make money. There's a reason why my portfolio is at 330 grand and I'm going to $1 million and 23 trades and 23 wins, because I understand a little bit about it and I want to share that information with you and share what I have for Sensei. So what we're going to do, Alex is in the chat. He wants to ask me a quick question. We're going to switch over in a minute to the main show, the opening bell show. I've got some big news. The reason why the markets are going to go up, no one's talking about, and I'm watching the feeds and I know no one's talking about it yet. It's going to be huge for the overall market, huge for everything. Really excited. So that's coming up in a minute. Now, to get us there, I've got to end this stream, put out the Bank of America earnings. Then I'm going to set up the show and be back. So it'll take me about 15, 20 minutes, I suppose, something like that. So we're going to go over to the extra channel. Now, what I'm going to do is I'm going to restream this from the beginning because there are people tuning in now who missed it. All right. They watch at different times. Now, you might say, well, they just watch the restream. Yes, you can. But if you watch the restream, you don't have the live 24-hour conversation here in the chat. The Lucasades, my army, they're all in here helping and assisting, answering questions. People are becoming members all the time. This is a separate channel. All right. The extra channel is a separate channel to the main show. It's only 99 cents, but it gives you 24 hours a day, 7 days of support. And also you can talk to me live because there's my little window into the studio. I am here and you can talk to me live and say, Martyn, you know, XRP is just breaking out. Here's some news. Can you cover it? I will say, yeah, give me the link in Discord. You can give me the link and I can come live back again at any time of the day and night. I mean, I'm on it all the time. I'm here to help people, right? So that's where we're going right now after I've just spoken to Alex. If you want to call in, you've got a chance to call in. You've got about a minute to call in. Here is the link. BAC was a binky bonk rally. Bank of America was a binky bonk rally. It was based upon good fundamentals. It's a good solid business. It's a good solid earnings. So there's the link. If you want to call in, you've got to tell me you're calling in the chat and you can ask me a quick question. I'm only going to be here for a minute or so before I hand you over to the extra channel. Then I'm going to be back with the big news. Make sure that you've all tapped the like and rung the bell so you won't miss the big news that I've got to bring you. So Alex, let me bring Alex in. He wants to have a quick chat with me. Alex, good morning to you. How are you, Alex? Are you well?
Good morning, Matt. I'm very well. Such a fantastic day.
It's lovely to have you here on the show. Thank you for joining me today. I want to thank you as well. It's a good opportunity to thank you because the work that you're doing in the extra channel and on Discord is being noted by lots of people. They're messaging me, telling me you're doing a great job. Apparently, you've been jumping on questions and queries and solving issues all over the place in minutes. Steady on, mate. You can't keep up with it at that speed. You've got a life, you've got a job, you've got to sleep, eat, have a shower now and again. Well, once a week. But you've got to fit things in around doing Discord. So I appreciate what you're doing. It's fantastic. And it's been noted. People are appreciating your help. How can I help you?
I appreciate you, everyone. And I appreciate, Martyn, that you put your trust in me to put this work. I enjoyed actually. It's been
Pleasure.
Fantastic. People are fantastic. This community is
why I asked you to work with Discord, because I know you're capable and I know you'll do a good thing, is I'm trying to improve the service. We want to add, we're going now fully exclusive on Discord subscribers. So the members that are already in have the access. If they cancel their YouTube memberships or they leave, that will be it. They won't be getting back in again, but they've got it for life as long as they are YouTube members. But everyone else joining now has to join as a Discord premium member. It's only a couple of bucks, but in addition to that, we're giving videos, training, extra services that are going to be added on top. And now I can answer all the questions because I was getting so many friend requests, so many messages. I can't deal with everybody. So we're now going to go with the original members plus all premium members. So the channel will be smaller, but it will be better and more effective. Alex, is there anything you wanted to say about Discord or anything that you're doing over there, or anything you wanted to ask me?
I'd say, first of all, for Discord, if anyone wants to get in contact, I'm fully available. I've been given the times due to the difference between UK and USA. I'm trying to put in my workplace and this work here with Discord, YouTube, everything. So we can be answering questions and anything that you guys need. I wanted to say, Martyn, that, I'm still a new investor. I've been a trader and stuff. I've lost money. I'll be a little bit harsh, but maybe people need to hear that from someone that is still new into investing. This game is not for soft people. And I was soft until my mate made me realize that, you know what, if you want something, you can't be soft. You need to toughen up. And I was like, hold on a minute, like what is he saying to me? Like, why is he saying to me? if someone reach out to help you, take the help. This game is definitely not for soft people. It's either your emotions, your feelings, or the market, or your goal. Like, if you want to achieve something, and especially with the market is not an ATM, is not here to give you money like, oh, I need £50 or $50 or whatever. It's not easy, but it's easy. I leave it to that, but there's no room for emotions. If you have a strategy, if you have a plan, stick to it. Right now, we saw Bank of America, amazing news, like by far the most amazing news that we've heard in these 3 months. We've stayed awake. We've been, especially Martyn, has been live on and on and on, and I've seen, I'm not going to give names or anything, I've seen some YouTube channels that they judge Martyn and they want to see evidence, but when they see evidence, they just disappear. Like, if you want to see evidence, it's late. It's either you believe on what you invest or don't invest. Like, there is no point of saying that, for example, XRP, it's a great company, Ripple. If you don't believe in it, you're only going to lose money. And take it from someone that has invested into companies, lost their faith. And I've been a Tesla fan. When Tesla was on $102, I invested in Tesla. I put my emotions, I put my feelings. I lost my trust against the company. What did it take? Just a year to reach into like $480.
Alex, I've got to rush you to wrap this up. We've got to get to the next show.
Yeah, that's the only thing that I want to say, Martyn, that there's no room for feelings. It's either you believe or you don't believe into what you invest. Absolutely right. Absolutely right. Alex, you're dead right there. Take emotions out of the game. Know what you own. Be an investor. Yes, trade if you want to, but trade with knowledge, not emotion. The moment you start seeing it go down, quick, I want to get out because everybody else is getting out. You've not considered the next 3 or 4 moves, let alone the next move. Alex, thank you for your great work on Discord and on the extra channel, thanks for calling in today with your thoughts. Appreciate it. Appreciate it. Thank you. There was Alex, who takes care of what's going on in Discord. Lovely stuff. And he's always in Extra as well. So what we're going to do now is send you over to Extra. I've given the link in the chat. I'll give it you again. It's pinned to the top. I'm then going to be able to end this stream and get back with the big news today, and you don't want to miss it. I've just discovered some really exciting news that's going to send the markets up. And as you can see, it's going up. That was not a time to sell. XRP bounced straight back. So straight away now you're chasing it again. Big mistake to sell out today. But anyway, that's up to you. We're trying to give you the information so you can learn and always win. 23 trades, 23 wins. I'm not going anywhere. So I will send you now to all the Extra channel. Thank you much indeed, Sebastian.
Sebastian van Winsberg has become a member on Extra.
Fantastic. I think he's just celebrating his 1-year badge, actually. He's just turned 1 year. He's just celebrating it. There he is. He was there. He must have been on there. He must have been there on day 1 then, because we celebrated our first anniversary a couple of days ago. So you can go into here, click on the $ in the Extra channel, and you might have some super chats to celebrate, some free ones. You might as well go and check those out. It's a great day. I've got lots of great stuff coming up. You don't want to miss it. Fantastic. Let me do very, very quickly. Day trader of the day. Let's see who wins the day trader of the day. I'm up 0.84. Let's bring in the funky music. Let's see who wins. This is a members only competition. Let's go. Here we go. Up 0.84%. Let's see who wins. It's going up quickly. It's all going to rebound very, very quickly. I hope you didn't start chasing XRP. You should have stayed in. That's all I'm saying. We've got a much bigger day, much bigger prize ahead if you have patience. Right, put in the scores. Are you up, down, or whatever? Let's roll the credits. Who are the stars of our show today? Here we go. If you did a super chat, if you became a subscriber, you'll be on the stars of the show today. Put in the chat whether you're up, down, or sideways. These are our new subscribers today. Pro Soccer, Flying Bee, Taylor, Christian Zayas, The Great Calib, Yohina, Yuri, Wally, Trevor, Surrender, 165, Benz, I can't pronounce the next one, Pappy, Perp, Ben, Mitster, The Concierge, Doc, Rowe, Youngblood, Uncle, Lion King, Bobby, Bear, Jerry Medina, Alfred, CRZ, Mo, Vincent, Miguel, Timothy, Remco, Ricardo, D. Hamesh, The Press, Nanka, DJ, Tijoni, Steve, B141, new members, Sonjoy, Syrian, Sasha, Ashley, and super chats from Doomsday, Benny, and Jay Harrington. That is the stars of they are the stars of our show today. Look at the market going up now. No surprise at all. Bad idea to take profits just as the bell opened, just because you don't know what you're doing. Up 3.34. Samuel goes into the lead. Up 0.84. Up 0.07. Up 2%. Up 0.36. Up 4.17. Andrew goes into the lead. I'm going to call it. Andrew 1.62. 0.02. 907 Andrew from Alaska. I'm going to say you're the winner. And I completely pressed the wrong button. I apologize. I completely broke it. Never mind. Thank you very much indeed for your trades, honest trades, and a thumbs up. I'm so sorry I messed the wrong button up. I'm sorry about that. Let me come to here and let me wrap up and give you my final thoughts. We're going over to Extra right now. Join me on Extra. I'm going to be back as quickly as possible on the main channel with some amazing news, why the market's up. It's not surprising because I'm researching. I didn't sell. I didn't get fearful. I know what I own, and much bigger gains are coming. A $1 million portfolio. As you can see, I'm now at 300. There you go. There's 300 there. 335, 336. $1,000, and I started with $5,000. Never shorted, never done options, holding, I'm not selling. That is a definition of investing. Join me now on the Extra channel. You can talk live. I'm going to replay what you've missed. Very important stuff. Listen to all of it, but most importantly, chat to the members in the team. All my team will be in there, and I'll bring you back to the main event very shortly. Now we're going to go over to the Extra channel. Are you ready? See you back in just a couple of minutes. Whoosh.